Hello.
Hi.
Hi.
Hello.
Perfect. Good morning. Good morning. Good morning. Yeah, good morning. Good afternoon.
Good morning.
Good afternoon.
Good afternoon here in Nigeria.
Good afternoon.
Good afternoon here in Nigeria.
Yes.
Nigeria.
It's noon.
Good afternoon.
Thank you very much. Good afternoon.
Good afternoon. Good afternoon, everyone.
Thank you.
Good afternoon, everyone.
Yeah,
Thank
good
you.
afternoon.
Good afternoon. I'm from Nigeria.
From Nigeria.
Good afternoon, everyone. I'm talking from Nigeria.
Thank you, sir. You are all welcome, sirs.
And Mas, good afternoon. Femi from Nigeria.
Good afternoon, everyone from Nigeria.
Good afternoon,
Good
everyone.
afternoon, sir.
From Nigeria.
From Nigeria.
Good afternoon, Fatima from Nigeria.
Good afternoon, everyone.
Good afternoon, Ruth from Nigeria.
Good afternoon, Chima Ikechukwu from Abuja, Nigeria.
Greetings from here, from Nigeria.
Greetings from Kaduna, Nigeria.
Yeah, thank you so much, everyone. It's a pleasure having everyone here. Once again, good morning, good afternoon, good evening, our professional colleagues from whichever place you're hearing us from. You're welcome to the maiden edition of the ICAN ROI International Conference. Welcome. Thank you so much for joining. So like I said, this is the maiden edition of the ICAN Republic of Ireland District Societies International Conference. I'm happy that everyone is joining virtually from whichever place you're joining us across the world. The theme of today's event is deep diving into the future of accounting and finance. And we would have amazing speakers run us through topics around this theme. It promises to be a very interesting and of course educating session. So please stay tuned to the very end, as of course it also comes with your MCPD credit hours. So thank you so much once again for joining. We want to start the event now by handing everything over to God. I'll call on the Vice Chairman of the District Society, Mr. Agbolade Matsuluko, FCA, so please give us the opening prayer.
Thank you so much, Lekon, and good afternoon to all our professional colleagues. Before the prayers, we have advised that as you are joining, please join with your name and your membership number so that we can be able to recognize you accordingly. Let us pray. Our Father and our Lord, we thank you for yet another day that we can come together even as professional colleagues. Thank you for this maiden international conference that we are holding. We are asking that you, our God, you will direct us in all that we do in Jesus' name. We also pray this hour, Lord, that you remember our country, Nigeria, during its 65th independence, that everything will go well. And all of today's event, we hand over to you. In Jesus' name, I have prayed. Thank you, Lekon.
Amen. Thank you so much, sir, for that prayer. Thank you. A few ground rules or the modus operandi before we start. So number one, there is to say that, reiterate what the Vice Chairman has said, that our profile name would be our full name, and of course the membership number. Our profile name would be the full name and the membership number. And again, just to reiterate that this is an MCPD credit hour conference. So, and again, these credit hours are allocated to those who participate. And participation here implies that you would stay here from the very start to finish. So that's the approach. So we're going to stay here from the start to finish. That's what we would call participation. There's going to be a form right after the session, the whole sessions, where we take attendance. So please stay tuned, and we hope that we all enjoy the benefit of the conference. Again, like I said, we have amazing speakers who would be running through the theme of the topic or the theme of the conference. So please stay tuned. The next on our agenda is the different anthems. So I would hand over to the General Secretary of the District Society to please take us through that. Thank you, Mr. Adewemi. Please, over to you, sir.
Thank you very much. Thank you very much, Lekon. I think the president will help us out. So got some technical issues there, please. Nigeria. Symbol that truth and justice reign in peace or battle honored, and this we count as gain. To hand unto our children a banner without stain. O God of all creation, grant this our one request. To build a nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed.
Soldiers are we, whose lives are pledged to Ireland. Some have come from a land beyond the wave, sworn to be free. No more our ancient Ireland shall shelter the despot or the slave. Tonight we man the barn of wealth, and Erin's cause come woe or wail. Men cannons roar and rifles peal. We will chant the soldier's song.
Thank you, Mr. Moderator. Over to you, Mr. Moderator. Thank you. Thank you, Mr. Moderator.
Thank you so much, sir. Thank you.
Over to you, Mr. Moderator. Thank you.
Can anyone hear me now? Thank you so much, sir. Thank you.
We can hear you.
Perfect. Okay, so the next on the agenda would be to have the ICAN Republic of Ireland District Society's chairman to give us his opening address. So you're currently seeing the picture of the district executives. So those are the brain behind what you're seeing here today. And of course, the activities that we're running here. So over to you, Mr. Chairman, sir.
Thank you, sir. Good morning, good afternoon, everyone. You're welcome to the first annual conference of the ICAN Republic of Ireland District. And my name is Kayode Popola. Greetings to all our special guests of honor and the 61st President, Malam Aruna Yahaya, BSc, MBA, MNI, FCA, the immediate past presidents of the Institute, Chief DCS Alaribi.
But I don't tell I'm giving the sheet for this laptop. I didn't give the sheet so that if I'm carrying it up and down.
You can continue, sir.
You're muted, Chair. You're muted.
Unmute yourself, Mr. Chairman.
The Registrar, stroke CEO, Dr. Musiba Lanre Olasukome, PhD, FCA, Chairman of District Societies present, Executive Committee members of ICAN Republic of Ireland, Fellows and Associates of the Institute, members of ICAN Republic of Ireland, members of the press here present, our valued friends joining us from across Ireland, Nigeria, and beyond, distinguished ladies and gentlemen. It is with an immense sense of pride and profound joy that I stand before you today, though virtually, to warmly welcome you to a historic occasion, the very first annual conference of the Institute of Chartered Accountants of Nigeria, Republic of Ireland District. This day has been a vision, a dream nurtured by the pioneering spirit of our members here in Ireland. Today, that dream becomes a reality. To each and every one of you who has worked tirelessly to make this happen, and to every one of us who has logged on to be part of this moment, I say a heartfelt thank you. Your presence is a powerful testament to the strength and unity of our community. We may be connected through screens, scattered across different cities and towns, but we are gathered with a single shared identity, We are chartered accountants.
However, we have some of the
chartered
that
accountants
requires
or associates of chartered.
with respect to different aspects. We all know that.
Mr. Chairman, please unmute yourself. Unmute yourself, Mr. Chairman.
Okay. Thank you, sir. The team we have chosen for this maiden conference is both bold and essential, deep diving into the future of finance and accounting. The word future can often seem like a distant horizon, but the truth is the future is not on its way. It's already here with us. We are all living in an era of unprecedented disruption. Artificial intelligence is not a sci-fi concept. It is written reports and analysis of data. Blockchain is redefining trust and transparency. Sustainability and ESG reporting are moving from the periphery to the core of corporate strategy. The very nature of value is being transformed. In this whirlwind of change, it is tempting to stay in the shallow waters, to stick to the familiar shores of traditional practice. But that is not the ICAN way. Our institute has always been a beacon of excellence, integrity, and adaptability. Our core value and proposition, therefore, is not to fear the waves of change, but to learn how to solve them. To not just witness the future, but to shape it. A deep dive is not a casual swim. It requires courage, preparation, and willingness to explore the depths. Over the course of this conference, we will submerge ourselves into the critical currents shaping our profession. This is why we must deep dive. And today, we will explore the depths through the three critical lenses. Firstly, we will dive into the digital ocean. Our session on navigating digital transformation in finance, leveraging technology for enhanced financial reporting and risk management, will equip us for this journey. We will move beyond the hype around AI, blockchain, and data analytics. This is why data analytics to understand how they are fundamentally transforming our roles. We will explore how to leverage these tools not as threats, but as powerful allies to enhance accuracy, provide deeper insights, and fortify our risk management frameworks. This is about evolving from historians of finance to architects of financial intelligence. Secondly, we will dive into the art of our communities. Our profession has always been about more than ledgers. It is about stewardship. The topic, empowering communities, the role of social finance in shaping the future, challenges us to look beyond the balance sheet. We will examine the growing imperative of ESG, impact investing, and sustainable finance. As accountants, we are custodians of trust and measurers of value. This session will explore how we can apply our expertise to measure what truly matters: social impact, community development, and sustainable growth, ensuring that finance becomes a force for inclusive and positive change. And thirdly, we will ascend with a broader strategic perspective. Our final dive, accounting and finance in the future, beyond the numbers, in an ever-dynamic world, will bring it all together. This is where we synthesize the digital and the human, the technical and the strategic. We will discuss the enduring importance of ethical leadership, professional skepticism, and strategic advisory. Technology may change the how, but it will never replace the why. Our integrity, our judgment, our ability to provide clarity in a complex world remain our most valuable assets. My dear professional colleagues, this conference is more than just a series of presentations. It is a call to action. It is an invitation to be curious, to be agile, and to be architects of the future. The insights you get from these deep dives should empower you to lead within your organizations, to innovate in your practices, and to reaffirm the crucial role of chartered accountants in building a resilient and prosperous future. Let it be the catalyst that transforms your practice, your organization, and your career. To guide us on this exploratory journey, we are privileged to have an exceptional lineup of thought leaders, industry experts, and visionary practitioners. They will equip us with the knowledge, the tools, and the mindset required, not just to survive, but to thrive in the future. As we embark on this deep dive together, let us remember the words of the ancient Greek philosopher, Heraclitus. The only constant in life is change. Our ability to adapt to change, to anticipate it, and to live through it is what will define the next chapter of accounting profession. I am incredibly excited about the discussions we will have and the connections we will forge. Once again, I extend a warm welcome to you all. Thank you for your commitment to our noble profession. Thank you for being part of this historic day. However, my greetings will not be complete without recognizing the immense effort that brought us here. My sincere gratitude goes to the dedicated members of our technical committee, the publicity committee, and the membership committee. Your countless hours, brilliant ideas, and wavering on commitment have been the engine of this conference. I am sure I'm not just grateful to know you, but truly honored to work alongside you all. On a personal note, I must thank my wife and my children for their continuous support and understanding, which fuels my ability to serve. And above all, to the Almighty God, we give all the glory. It is by His grace that we have gathered together, overcoming challenges to make this conference a reality. On behalf of the entire Executive Committee of the ICAN Republic of Ireland District, I welcome you to the first ever annual conference of ICAN Republic of Ireland. I wish you all an engaging, insightful, and transformative experience. Thank you and enjoy the conference. Thank you.
Thank you so much, Mr. Chairman. That was an Obama-esque speech. The last time we heard that powerful speech of that nature was when Obama was elected as the president. Thank you so much. So again, you've touched on very critical areas and the essence of why we are here. So we probably would start doing a proper deep dive as the team implies. But before we do that, the next on our agenda would be the welcome address from, or the keynote address from the 61st President of the Institute of Chartered Accountants of Nigeria, Malam Aruna Mayahya, MNI, PhD, FCA. 61st President of the Institute of Chartered Accountants. So, I mean, sincere apologies for the error here. Has to be 61st President of the Institute of Chartered Accountants of Nigeria. You're welcome in our midst, sir.
Okay, maybe the president is still on the way.
Yeah. Okay, so whilst we're waiting for the president to settle in properly, we probably would move to the very first technical session.
Okay.
President is here. Oh, yes.
You're very much welcome, Mr. President. Okay, whilst we're waiting for the president to settle in and probably deliver his goodwill message to us, we probably would move to the very next or the very first technical session of the day. So to run us through the synopsis and the summary of what this particular topic is all about, I'll call on Joy Olisa, CFACA, to please run us through the session. Do you want to please run us through the synopsis of this session and, of course, introduce our guest speaker?
Thank
Hi,
you very
Joy.
much, Subur. Thank you very much. Good afternoon, good morning, good evening, wherever you are joining us from. It is with great pride and joy that I welcome you once again to this historic moment, the first ever International Accountants Conference organized by ICAN, Republic of Ireland District. Wherever in the world you're joining from, welcome. Thank you for being here. To remind you once again, the attendance on Zoom and YouTube is being monitored for MCPD purposes. Please stay tuned to be fully awarded the MCPD points. Our theme today, deep diving into the future of accounting and finance, which our chairman has done justice to introducing. It couldn't be more timely. The world around is changing fast, and it is impacted by technology, regulation, and global markets. And we as accountants, we should not just keep up, we should lead the way. Our first technical session is titled Accounting and Finance in the Future Beyond the Numbers in an Ever Dynamic World. The world has come a long way since Luca Pacioli first laid the foundations of double entry bookkeeping. We've swapped our dusty ledgers for cloud-based ERPs, and now the train is moving to artificial intelligence and machine learning. The journey of accounting has been nothing short of transformational. And we've also seen the change in the roles that we've held. We've moved from just being numbers people, bookkeepers, and accountants. We are now business partners, change agents, strategic advisors, shaping business and society. This session invites us to explore what it truly means to be a finance professional in a world that is constantly changing. And it's my absolute honor and privilege to introduce our first speaker for today's conference, a man whose journey through the world of finance and accounting is nothing short of extraordinary. Wait till you hear it. Dr. Olumuyiwa Adebayo is not just a finance professional, he is a visionary, a scholar, and a mentor. His impact has spanned continents, or it's and spanning continents and disciplines, with a doctorate in finance and a constellation of global certifications, including CFA, FRM, FCA, CGME, and CMC. Dr. Adebayo embodies the very essence of excellence in our profession. His academic journey began at Yaba College of Technology and the University of Lagos, and has since taken him through the halls of the University of Cumbria, the University of Texas, Harvard Kennedy School, Oxford, Cambridge, and Columbia Business School. From actuarial science to artificial intelligence, from international tax to blockchain, his thirst for knowledge is matched only by his commitment to sharing it. Professionally, Dr. Adebayo has held pivotal roles in banking and consulting, including as a senior IFRS specialist at Deloitte, Nigeria, where he contributed to Nigeria's IFRS adoption. Today, he is the group head of tax and financial controls at Sahara Group, a multinational energy conglomerate where he leads strategic financial operations across diverse sectors. But beyond the titles and accolades, what truly sets Dr. Adebayo apart is his heart for mentorship and education. He teaches, he writes, his books on mergers, reporting, and Excel modeling are widely read, and he even builds AI tools like the FinPolnomics GPT chatbot to empower finance professionals in the digital age. Can you think of anybody better to handle this topic? He is a fellow of ICAN, CIT, and the Institute of Credit Administration, and has served on the ICAN Faculty of Corporate Reporting for 2 consecutive presidential years. He's also the chair of the Committee of Finance Experts at NECA. Dr. Adebayo is a man who believes in the power of knowledge, the importance of integrity, and the promise of innovation. Please join me in welcoming a true thought leader, a passionate educator, and a trailblazer in our field, Dr. Olumuyiwa Adebayo. Please, I want to see the applause in the chat box. Please encourage him as he comes and take the stage.
Okay. Thank you, Madam Joy. I believe you can hear me. I'm fortunate today and also happy to be identified with the Institute and also with the district in the Republic of Ireland. And I really appreciate it. And to all other colleagues, I'm much more happy to be here to have 1 or 2 engagements with you all. Today, we'll be deep diving into the future of finance and accounting. And the theme for my own topic, as it has been read, border on accounting and finance in the future. And this is beyond numbers in an ever dynamic world. Now, I'll start with 1 or 2 teasers to more or less imagine our view about our role, not only about today, but about the future as it demands. Now, let's look at a provocative question, and I will use the word provocative question from the perspective that we may more or less be probably challenged as our profession may be revitalized or reshaped as AI continues. I believe you can see my slide. Can you see my slide?
Not yet. We can't see it yet.
Okay.
Not yet, sir.
Okay, let me share my slide now.
We can see it already. We can see it.
Oh, okay. I'm trying to share it directly.
Yes, we
Yeah,
can. We can. We can see it.
It's visible.
Okay.
No, I'm not sure
Are you
that's
sure, Lekon, can you please, okay, yeah.
Okay.
Can you share your screen now? Yes, it is now being shared now.
Okay, can you see my own now?
Yes, it's coming up.
Okay.
It's coming up.
Okay. Is it up?
It says double click to enter full screen mode.
Okay.
Yeah.
Yeah, we are.
Okay, thank you very much. Okay, as I've said, we'll be discussing briefly on accounting and finance in the future, beyond numbers in an ever dynamic world. Now, the first teaser I want to put forward is provocative enough, and it borders about if numbers could speak, would they only tell us about profit or loss, or would they reveal the very future of our organization? Today, accounting and finance is no longer about recording history. It's about how we shape the future and the destiny as it holds. And furthermore, I would say that is why we must go beyond the numbers. And I think this discussion of going beyond numbers has been there for over 10 years. But in today's world, we then need to take it more seriously because certain innovative ideas and technological breakthrough has more or less fast-tracked the need to embrace this fact. The second one borders on the futuristic imagery of what our role may be in the future. Now, let's imagine a world where audits are done by AI in seconds. Supply chain are verified by blockchain in real time. And financial report tells the story not just of money, but of impact, trust, and sustainability. And we are there today. That world is not tomorrow, we are already there. And that's why accounting and finance must reimagine beyond numbers. Now, these 2 teasers are speaking to the same thing, and would then signify that why beyond the numbers is that over the past, accounting has revolutionized dated back from 1494 by the Reverend Father Lucas Pacioli, where accounting began from the aspect of bookkeeping, okay, which today we can call them scorekeepers. And it has now more or less navigated towards what we call strategic navigator, which means it's now beyond just financial reports, historical reports, more or less looking backward, but now we have new inventions that can help us look backward as we move forward. And that's why when you look at this image, you could see here, it's not about looking backward, it's about looking into the future that we will imagine. And therefore, numbers are means, not an end. And therefore, for we that we are future-ready accountants, what then our roles will be much more is to interpret, innovate, and more or less influence. Now, in that light, let's look at our trajectory. Double entry bookkeeping was our main goal dated back in centuries before now. And in the last 5 to 10 years, we've more or less all embraced ERP system, that is enterprise resource system. But between 5 years and now, COVID and some other activity around the globe are reshaping our dynamics. Therefore, we are now moving away from just ERP system to cloud system. And as we are already going into the cloud system, we are now confronted with AI. And therefore, AI is not a new development. What is new about AI is because we now have enough computing power, and more or less we have enough data and data centers and warehouses where all of these things can meet. AI, if you look at the history, began since 1956. But in the last 5 years, we've had a long trajectory because of this innovative technology that has come into play. Therefore, what do we need to look out for in the future, 2025 and beyond, is cloud computing and annexing AI in increasing our efficiency and productivity. Therefore, what does AI do better than us? Maybe something that are mundane, something that are routine, something that can easily be scaled up and scaled down. And that is what it is today. Therefore, what will be our current driver towards all of these things? IFRS is now globally adopted as financial reporting standard. And therefore, this is also driving series of integration. We are also embracing integrated reporting. We have more or less also embraced sustainability reporting now via ESG disclosure requirement and the likes. Therefore, accounting has really evolved beyond what we initially imagined. Therefore, key forces that will reshape or are reshaping our profession today. One is the technological disruption. And the most disruptive technology today is artificial intelligence. Okay? But prior to artificial intelligence, we've had issues that borders on robotic process automation, RPA, blockchain, which is more or less this for smart contracting because of its nature of immutable characteristics, and also data analytics, cybersecurity, and all of these are the technological disruption that we are faced today. And we then speak to the fact that any accountant that is ready for the future must be able to embrace all of this. Now, it doesn't mean that you have to be technical about it, but just having basic idea and of its usage is more than sufficient enough for you to be able to more or less go along with others into the future requirement of accounting and finance. As you're also aware, global regulations are now coming in with respect to sustainability reporting, IFRS S1 and S2 as issued by international sustainability standards. But likewise, you have OECD Pillar 2 also talking about minimum global minimum tax and the likes. And again, ESG is a key factor as it's been more or less proposed and sponsored by the United Nations. And all of this make us to understand that we require new set of skills from our professional accountant as time goes on. Now, most importantly, there is a paradigm shift, and that is a talent shift based on the fact that Gen Z more or less prefer to do things in a different way that seems to be more efficient, or because they don't like more of boredom activity, mundane activity. Therefore, they more or less, through their ingenuity, create better ways of doing things just because they want to get it done and move on to other things. Therefore, there is a paradigm shift now. You now see that your interactions much more with Gen Z accountants is much more futuristic. And therefore, how do some of us that are old accountants or finance professionals need to bridge that gap? And also, post-COVID, we now experience issue of hybrid work environment, and all of this required us to reskill, all because we cannot work in a hybrid or remote environment or of the future environment that is coming without harnessing technology from A to Z. And all of these are things that we need to more or less embrace. Now, as we move on, you'll find out that today, most of our role and our function are being automated. Technology is taking over most of our space. Today, most times, imagine you are in a bank and you have to do call over, you have to review private transactions. With the use of AI, you can more or less carry out anomaly detection, predictive insights, and the likes. And also, you can do more of data analytics, which give you more business insight towards decision making, rather than just historical accounting that we are much more used to. And also, today, you can use robotic process automation for your bank reconciliation, for your payroll reconciliation, for many other things, even for transaction processing, as the case may be. And also, this comes with its own threats because of technology. And therefore, another new set of knowledge that our internal auditors, internal control professionals, and forensic experts also have to embrace is cybersecurity. Those knowledge, those technicalities, those skills are also much more important, as the case may be. Now, looking beyond number, let us imagine ourselves as an accountant, from bean counters to value creators. Now, what we know as CFO primarily is a chief finance officer. But today, I'm looking at it that maybe CFO will now be seen as a chief future officer, which means always looking into the future at every point in time. Now, if the future horizon is ahead of you, therefore, what are your core skills that you need to have today? One that is much more important is strategic foresight, and that's what makes you a visionary, okay, not an orthodox person. The second thing is digital fluency, which means today, the bridging of the gap can only be carried out and annexed effectively and efficiently through technology. Therefore, you must be digitized in all respects. And again, we won't forget where our background lies about integrity, about ethical principles, and the likes. Therefore, that is where core of our professional inbuilt instincts comes into play, which means anything we do, both technological wise or otherwise, we must ensure we embrace ethical principles. And in our judgment, we must consider that ethical practices in all what we do. And as I said earlier, to guarantee financial integrity, to safeguard the asset of the company, to safeguard data of your customers or of your business partners, issue of cybersecurity must also be embraced based on the future horizon. Now, in practical sense, what we've seen today much more is that you find situations where many payrolls of multinationals are now run globally with robotic process automation, which make it faster in processing. Now, today, supply chain is very critical, and we experienced this during the COVID period. That supply chain is very critical along with its finance. Therefore, how do you ensure you protect your supply chain system? Is through blockchain today. And what blockchain does is that it allows every party within that chain to be protected, and any information exchanged within that chain is sacrosanct and is immutable. And in that perspective, it more or less safeguards the interest of all parties, as the case may be. Now, let us look at audit. Now, when we look at audit, maybe in the near future, audit system and methodologies will have to be redefined, or because audit is just an examination. And when we talk about examination, it's more or less sampling and the likes. But with the advent of AI, you can now do 100% audit of entries. And therefore, which seems to speak to the fact that maybe in the future, as technology improves, as knowledge improves, as skills are more or less enhanced, we can now have 100% audit in such a way that, or real-time audits, whereby machines will be doing all of this on our behalf. Also, we will not forget that the world now is fighting global warming, and issue about carbon footprint. Therefore, ESG, that borders on environment, society, and also governance, will more or less be taken into consideration. Therefore, and that's why you find out that we now have ISSB more or less having the responsibility over the issues that borders on sustainability reporting. And therefore, this also needs to be embraced as times move on. Now, also, let us now look at the paradigm shift, okay? How we are shifting the goal of accountants merely from compliance requirement to strategic values. Now, this is just a comparison between traditional model and future model. Now, let's look at the primary focus of a traditional accountant. It's more or less historical reporting and compliance. But in the future, our role will be much more of predictive analytics and decision support. That makes us business advisor. That makes us strategic architects of a business. And also within the key activities that will be required. Before now, our activities border much more on transaction, record keeping, preparing financial statements, and making some little interpretation. But going forward, we'll be much more data-centric, we'll be much more analytical in mind, much more of drawing business insight and carry out scenario planning and modeling, as the case may be. Also, with respect to value proposition, our focus before now was just accuracy of the accounts, compliance to policies, regulations, and financial control. But today, beyond that, we will now be looking at insights, foresight, strategic guidance, all because these are the things that create value over a long period of time. Likewise, when we look at our time frame, before now, most of our job is backward looking, which means we are looking backward on a historical basis to present information that will be used for future decision. But most times today, before you look backward and come up with recommendation, new paradigm have changed, and therefore which make information we present not much valuable for future decision making. Which then means that much of our activity now, with the aid of technology, such as blockchain, artificial intelligence, and RPA, will now be much more forward-looking in order to be really strategic architects to businesses. Likewise, for stakeholders interaction, before now, based on our traditional approach, we are limited to financial data, being the consumer of financial data. But going forward, our much more activity will be collaborative in nature so that we can strictly be strategic partner, business advisor to every other functions and executives that make these business decisions as time goes on. Now, in all of this, what then is the foundation of our future accounting? The foundation is sitting on a tripod, which means one is digital orchestration, which means we need to harness technology, we need to integrate technology, and we need to also embed data governance for data security, as the case may be. We also need to more or less embrace predictive intelligence, what makes us draw insights beyond what our naked eyes can see, and will give us edge about making future decisions above our peers. All of these are key, and you can't do this without entering into strategic partnership, collaborating, communicating effectively, engaging effectively with every stakeholders, because without those stakeholders, all of what we have invent cannot be actualized. And therefore, that is also key. Now let's look at real life situation. Unilever globally has more or less experienced finance transformation away from transactional finance to now analytical finance. In the past, much of the activities that are transactional is about 70% transactional and 30% analytical. But reverse is the case today, whereby it's much more 70% analytical in finance and accounting related activities and just 30% transactional. With the new development with AI, it's more likely that it might tend towards 90 or otherwise. And when we look at it, what has happened? Now they have reduced forecast error by as much as 35%, cut processing costs as much as 40%, provide insight to business partners, and also embed finance in operational units, okay, which make things synchronized. Now, today, technological revolution in finance and accounting is much more driven by the development of machine learning applications, which has now metamorphosed into bigger intelligence, which we call artificial intelligence. Core aspect of it today is that bulk of transactions you process can now be processed by AI. 2 days ago, CAC more or less mentioned that they have about 7,000 backlog of registration. Now they are now employing AI to more or less process those transactions rather than human being processing those transactions. And those are one of the benefits that you can employ. And I'm likely going to show you on this platform now how you can use AI to also process your invoice, to also do 2 or 3-way matching, to also validate invoice against quotation and the like. And all of these are the beauty of it. Vis-a-vis predictive analysis, where you can use it to forecast, and you can use it to draw hidden business insights. And today, the emerging applications are things like conversational AI, which is what you call generative AI, like ChatGPT, or like the one I developed, which is Friponomics GPT. And it also could be advanced analytics, which means you can use some AI to process your data to give you insight, not only in infographics, but in business recommendation, in identifying key issues, and more or less providing bigger picture and insight, similar to what Siemens is also using for their invoice processing, as the case may be. Therefore, looking at this as a goal, blockchain is a good technology that is now being embraced. The beauty of blockchain is that it allows sanctity of contracts so that no single party can alter information or arrangement that has been made by all parties and has been more or less acknowledged or approved within the chain. And also today, RPA, which means automating most of our processes, is the order of the day, so that mundane processes are meant for machine, while strategic judgment and other ones are meant for human. And it is the marrying of human intelligence with machine intelligence, with room for insight and effective decision making, is what now makes what we call integrated intelligence. And in doing that, we need all of these resources, as the case may be. Therefore, let's look at unlocking cloud computing. Now, today, cloud computing is the order of the day. And what does that mean? Which means before now, many companies more or less have their own internal server. They have their applications, whether ERP or accounting packages. But the problem is that once you leave your domain, which is your office, you can't have access to the server. Therefore, transactions are stalled unless you come back to office. But today with cloud computing, your transaction with other parties, with members of your company, with approval processes, all of them end-to-end can be done remotely anywhere you are in the world, provided you have access to internet and provided you have access to enter into that cloud system of that organization based on their security policies and the likes. And therefore, it makes things much more real-time. It makes activity flexible. It makes it scalable. It makes it much more something that you can do with ease. And the beauty of it is that most of this cloud technology now comes with what we call business intelligence, where you can visualize data in more meaningful form with the use of infographic, charts, analytical tools, and the like. Therefore, this continues to help executive management board in decision making. Another technology that is being embraced within the system of inventory management and the like is the IoT, that is Internet of Things, which means it's a technology where you more or less have sensors that are more or less affixed to certain things in order to trigger information about activity going on within that space. And that is also another technology we need to embrace. But let's look at the human element involving our professional competency. Now, let's look at it from the less critical aspect to the more critical aspect. Now, manual tasks now can now be automated, okay? And this can easily be replaced once we embrace RPA, we embrace AI, we embrace blockchain technology. Now, the next thing for us is to develop our technical skill beyond just numbers or accounts. But again, we need to develop our skill to digitize our expertise. Likewise, you need to build more of business acumen, which some people call commercial sense. Okay, you must know more about your micro or your industry, and you also need to know more about your macro, which is the business environment itself, Nigeria as an economy and global economy as the case may be, because all of these factors play one role or the other interchangeably as they affect the future of your businesses. I remember our role is to be strategic architect of driving value, okay, not of just counting money, reporting invoice, checking invoice, and some other things. Okay. Likewise, the most important part of it is communication. Okay. Communication skills start from how you draw business insights, how you make presentation of those business insights that makes it meaningful for the decision makers to adopt, and how you present or frame information, how you provide clear and unambiguous advice are critical skills that we accountants need to improve on now. Now, looking at skills transformation matrix, from soft skill to technical skill, and from decreasing importance to increasing importance. Now, when we look at soft skill that are decreasing in importance is routine compliance check. Now, routine compliance check is going to phase out over time because we now have technology that can do that and send triggers or alert as the case may be. Now, but the soft skills that are much more increasing in importance now are strategic thinking and planning, which make you strategic architects in the modern business. Okay, when we now look at technical skill, we are now decreasing importance of technical skill with respect to manual data entry and processing. Today, you are more or less taking an invoice, you will now read the invoice, you will now be posting it, debit, credit, and all sorts of things. Today, with your automated process, with your P2P process, what we call procure-to-pay process, everything is done by machine, including the accounting entry, up to the level of even initiating payments. And therefore, technology is taking that away from us. What then is technology replacing with it is that we need to develop our technical skill much more about data analytics, okay, and interpretations and drawing in business insights to that. All of these are things that we need to more or less embrace as time goes on. Therefore, broad knowledge is key, core expertise knowledge is key in all what we do. And the pathway to continuous learning is formal education, which most of us have had. Experiential learning is also key, which is much more important. And lastly, professional network, which is what we are doing today, and amongst other things we do in the immediate future. Therefore, going by this, we need to embrace the fact that all of this organizational readiness is influenced by human capital evaluation. It's also influenced by technological infrastructure that we acquire or annex. Most of them are cloud-based, which make it cheap, and you can scale it as you grow as an organization. And lastly is a process maturity review that more or less we do as a continuous process of improving in our annexation of technology. Now, this is just a framework that can be modified by various organizations within their finance and business space. Okay, for phase one, it's much more foundational in nature, whereby your digital transformation process is to look at how manual operation can move towards robotic development, how you can now move from there to cloud system, how you can move to dashboard implementation where business insights are more or less shown to the decision maker only by way of dashboarding, and this can be granulated. And last, with the AI integration, which makes everything much more easy. Now, when we look at the second phase, borders much more on capability enhancement, and therefore we have various stages that we need to follow in order to get to the top. And lastly, in phase 3, which is much more strategic innovation transformation, what then do we need to do is to look at how we transition from operational focus to digital leadership. And this requires us to embrace emerging technology, such as adopting AI, blockchain, machine learning, and Internet of Things, and also embrace strategic focus, shift to strategic decision-making instead of intuitive or traditional decision-making process, and also collaborate more, which means we need to embrace that in today's world, you can't get anything done effectively without collaboration. And all of these are key, and these are also achievable through effective change management system. And one of those things is to train and engage support. Performance management is key. to evaluate performance of it, and communication is key in ensuring that all parties and all stakeholders are brought on board.
Sorry, Dr.
And
Olumuyiwa. Sorry, Dr. We have 2 minutes more, please.
okay,
Sorry.
yes, okay. 2 minutes more. Now, therefore, I'm going to move on. As we have said again, the core characteristics of our finance professionals by 2030 will now be much more of agile collaborator, innovative catalyst, strategic business advisor, and we must be technology enabler, as the case may be. All of these things are things that I have more or less pictured in that. Therefore, the technology transformation finance organization, we must consider real-time insight in what we do. We must embrace that our role is shifting and has shifted. We must value new generation of professionals because their level of thinking is far moving ahead of most of us, and we must embrace digital leadership. Now, what role does ICAN members have to do in this? Is that one, you must look at how you close your digital skill gap, assess your readiness, embrace continuous learning, lead initiatives, and you become a digital leader. Now, for ICAN District Society, you have been doing what we're doing now, educational programs, industry collaboration, and maybe advocate and more or less support process of building standards across what it is. As the case may be, what I will say to us at this point is that accountant is reinventing, not dying. Accountants who embrace technology will surely lead. My call to action here is that we should go beyond the numbers. And how do we do that? Because technology will not replace accountants, but accountants who uses technology will replace those who do not. That is what will shaping our today from our future. Now, to wrap it up, I will just simply allow you to give me access just for 1 minute or so to more or less display something on the screen. Now, let me display something on the screen. Now, I want to show you something here. Now, I have invoices. These are just dummy invoices. Okay, and I equally have purchase order, dummy purchase order, and I have dummy goods received notes. What I want to do is that I can now show us how we can use AI, especially the one app built, to also embrace that. Now, we will have access to Economics GPT on ChatGPT platform. Now, what then will I do is to copy or attach those invoices. I believe we can see them.
Yes.
Okay, therefore, I will attach it into this and I'll tell them to match the invoice with the quotation and see whether it matches. Okay, and with the goods received notes. Okay, I'll say conduct a three-way match and provide valuable insights. Okay. Now, look at the insight he has drawn from me. He has told me that from my review of the uploaded images, there are slight differences between the PO, the goods received note, and invoice. The supplier invoiced for more than what was received. The price unit is consistent with the PO, so no price inflation. Extra charge, the supplier added VAT correctly, but also include a miscellaneous handling fee not stated in the PO. Risk points, paying based on the invoice without adjusting the goods received note will mean overpaying for items not yet received. Therefore, he has given me insight and recommendation. What should I do? Flag quantity variance. Payment should only be approved for quantity actually received, hold back the difference until delivery is complete. Question extra charges. Handling or add-on not in the PO should be disputed or require internal approval. Approval for accounting record only goods received as inventory. Goods received basis, the note basis, not the invoice extra. Internal control strengthen approval workflow. AP team, account payable team, should strictly enforce three-way matching before payments. And that's just it. That is just one. Another thing there is that I can click on an invoice and say, please process this invoice or probably give me, okay, let me give it the final one, just a simple invoice, and I say, evaluate the three-way match and process if it matches and extract the accounting entry. You can use this for bank reconciliation. Therefore, this is a three-way match, and all of them match. I supply it with the PO document, with the goods received note document, and the supplier's invoice. And everything match. And based on match, it's going ahead to recommend process for payment, and it provides me the accounting entry. And this is what I can easily automate so that we are not doing anything other than drawing business insight as professional accountants. Thank you very much, and God bless you.
Thank you very much, Dr. Olumuyiwa. This was short but loaded with a lot of insights. I don't think I'll ever forget, if numbers could speak, what would they say? And thank you for demonstrating what we can do with AI. Because of time, we would only take two questions. One is, how can we use AI to analyze bank statement, which I think you have mentioned. And then there is another one. How can we ensure that AI models trained on potentially biased historical financial data do not perpetuate or amplify discriminatory lending or investment decisions? And what technical safeguards or fairness metrics are most effective in mitigating this risk? Because of time, we'll only take this question shortly. Thank you. So.
Okay, thank you very much. Again, the fear people have about AI is bias. And what is bias in AI? It simply means that every AI algorithm or machine learning algorithm or deep learning algorithm behind it is trained using past or what we call historical data. And therefore, this data may contain some biases. And that's why you find it that we have what we call fine-tuning and weighting system within AI, whereby we try as far as possible as ML experts to more or less remove those biases, okay? But again, in reality, even in human being, you can't eliminate bias as far as practicable. But again, within the AI space, that's why you see continuous fine-tuning, continuous learning, and also AI give more credence and weight to new learnings more than historical learnings. Okay, these are technological things that, or technical things that work at the back end of it. But as far as practicable today, there are more or less processes put in place to ensure that the algorithm are bias-free as far as practicable. But again, I cannot come here to tell you previously that you can eliminate bias 100% because provided bias are still embellished in the source of the data as generated by human being to which AI is fed. Therefore, as far as practicable, they will try to eliminate those biases, but to the barest minimum, but not necessarily 100% as the case may be.
Yes, thank you very much. Because of time, we will not take any other question. We want to, on behalf of the chairman and all of the EXCO, and on behalf of everyone, want to say a big thank you, Dr. Olumuyiwa Adebayo, for lending us your time and for very detailed presentation, which I'm sure by the applause, you can see how much everyone loves it. We hope that when we call you next time, you would be ready to accept our invitation. Thank you very much, sir. And we would I'll hand over to Soburu. Thank you.
Thank you very much. Bye.
Thank you so much, Doc. Can you hear me, Joy?
Yes.
Perfect. Thank you so much, Doc. That was a very powerful message, right? Again, introducing the FinPol GPT. I think we need to make a lot of noise about that. Thank you. That was a very powerful thing to do. Again, for auditors, probably would be looking at a three-way match as a control. And these are insights you could draw from here and see where deficiencies are. So that's a key takeaway for me. Thank you so much for that. So we should be going to the next session. But before we do that, I think we have the presence of our amiable 61st president of the Institute of Chartered Accountants of Nigeria, Malam Aruna Mayahya, MNI, PhD, FCA. You're very much welcome to our mesa. You're very much welcome to our midst. Do you want to give us some 5 minutes or 10 minutes welcome address or goodwill message?
My distinguished colleagues, are you hearing me?
Very much, sir. You're welcome.
Okay, thank you very much. The chairman of the ICAN Island District Society, Mr. Kaode Popola FCA, and other executive members, our professional colleagues that have joined the program. I can see we have over 900. This is one of the highest number we've witnessed because of the importance of the topic that has elicited full support of our members. My distinguished colleagues, ladies and gentlemen, good afternoon. I'm immensely delighted to welcome you all to this landmark occasion, the inaugural International Conference of the Republic of Ireland District of ICAN's Institute of Chartered Accountants of Nigeria. This gathering is truly a milestone, and I warmly congratulate all Chartered Accountants of the Republic of Ireland District for bringing this vision to reality. On behalf of my colleagues on the Governing Council and the entire membership of the Institute, I extend profound gratitude to the district executives, ably led by Mr. Kaode Popola FCA, for their exemplary and visionary leadership. This initiative has not only placed the district firmly on the pedestal of professionalism, but has also aligned it with the proud tradition of excellence established by other ICAN international districts. The themes of this conference, deep diving into the future of finance and accounting, could not have come at a more befitting time than this in the history of our profession. We are in an era where disruption has become a norm, where sustainability and technology are reshaping business models at an unprecedented pace. The shifts compel us to reimagine the accounting profession, defining the essential skills, competencies, and knowledge needed to thrive in a rapidly evolving global landscape. Indeed, these are defining times for our profession. Mega trends are reshaping our world: climate change, technological disruption, demographical shifts, geopolitical fragmentation, and social instability is not merely altering the economic landscape. They are fundamentally redefining the expectation and responsibility of accountants. The profession must move beyond traditional financial reporting to embrace sustainability metrics, navigate complex regulatory framework, and strategically integrate emerging technologies such as artificial intelligence and blockchain. Consider this: data from the World Economic Forum indicate that 2024 climate-related disasters caused an estimated over $368 billion in global economic losses. Yet, research from ISPA and CIMA show that only 48% of finance professionals measure the impact of sustainable initiatives, while 45% measures their performance. This imbalance underscores the need to shift from compliance-driven reporting to strategies that capture long-term value creation and sustainability impacts. On the technological front, PwC projects that artificial intelligence could add about $15.7 trillion to global economy by 2030. Already, over 60% of finance leaders, according to Deloitte, are investing in AI tools across core finance functions. For accountants, this is not a threat, but a profound opportunity. As Alvin Toffler famously observed, the illiterate of 21st centuries will not be those who cannot read or write, but those who cannot learn, unlearn, and relearn, unquote. Our profession must embody this spirit of agility to learn, unlearn, and relearn. Demographic changes is another profound force. By 2050, 1 in 6 people worldwide will be over 65 years, compared to the 1 in 11, 2019. This aging trend is already reshaping the labor market, especially in highly income economies, where shrinking workforce and rising dependence ratio pose structural risk to productivity and growth. Yet, it also presents opportunities for accountants to design resilient, age-inclusive financial systems and to innovate in ways that maintain efficiency and drive economic stability. To remain relevant in this dynamic era, our profession must do more than respond to change. It must lead it. Tomorrow, accountant must be a digital native, fluent in data analytics, artificial intelligence, and emerging technologies. As sustainability and ESG reporting become mainstream, our focus must expand beyond profits to embrace planet and people. Yet, amid all this innovation, ethics must remain our curator. At the Institute, we are committed to preparing our members for this evolving landscape. Through our information technology and data, sustainability reporting and ESG faculties, as well as our member continuous development program, we are equipping chartered accountants of Nigerian descent to remain relevant, adaptable, and globally competitive as the profession enters new era. I have no doubt that erudite scholars assembled for this program will do justice to the theme of these diverse sub-teams. I urge all participants to make most of interaction tools available so that together we can generate insights that will serve as a valuable guide for charting the global profession's future. Once again, I commend the Planning Committee and the leadership of ICAN Republic of Ireland District under Mr. Kayode Popola FCA for so diligently curating this timely theme and ensuring success of this maiden conference. Thank you all. God bless the Institute of Chartered Accountants, Ireland District. God bless the Institute of Chartered Accountants and God bless the Federal Republic of Nigeria. Thank you and God bless.
Thank you so much. The president, the 61st president of the Institute of Chartered Accountants of Nigeria. We're indeed grateful to have you in our midst here in Ireland. Thank you, particularly in this auspicious occasion. We're grateful. Thank you, President. Okay, so without further ado, we would go to the very next session, the next technical session, and I would hand over to another professional colleague here, Mr. Best Akinola, to please run us through the synopsis of the second technical session, and of course, help us introduce our guest speaker for the second session. Thank you.
Thank you
Over
very
to
much,
Mr. Best
Sobo.
Akinola.
Yeah.
Thank you.
Thank you very much, Sobo. I'll just dive straight into it. Moving on to the second session of this conference. This is titled Empowering Communities, this role of social finance in shaping the future of accounting and finance. So this session will address the evolving nature of the global finance landscape and the implications for accounting and finance professionals. It will explore how rapid changes driven by globalization, regulatory shifts, tech innovation, and economic volatility are redefining traditional roles and expectations. This session will also provide insight into how professionals can remain agile, future-ready, strategically positioned to lead in a constantly changing environment, especially with the integration of ESG factors into our accounting framework. This session will be delivered by Donald Traynor. Just a little on the profile of Donald Traynor. He was raised in rural Cavan within a family deeply engaged in community development. Donald built his career on foundation of social impact and enterprise. He completed a BA in economics and geography at UCD, University College Dublin, followed by a postgraduate diploma in tourism and business studies at the University of Limerick, and later an MBS in cooperatives and social enterprise at UCC, University College Cork. He is a qualified financial advisor accredited by the Institute of Banking. He joined CFI Community Finance Ireland in 2004, where he designed and managed the first cross-border business support program for social enterprises on the island of Ireland. He will be, he also led the hosting of the first all-island social trade show in 2008 with 1.5 million euro investment from CFI's parent company. He went on to establish the organization's southern subsidiary from a zero base in 2008. Under his leadership, this subsidiary has since disbursed 60 million euros in funding and currently manages a portfolio of 18 million euros. In 2020, Donald was appointed the group CEO of CFI, the only all-island social finance provider dedicated to supporting the community and voluntary sector. Beyond this professional role, Donald is actively involved in his local community. He serves as treasurer of his GAA club and manages the under-15 Premier team. He's been married to Joanne for 21 years and is a proud father of 2 children, Marion and Shannon. Let's give a warm virtual round of applause to Donald as he takes the mic to share his insights with us. Donald?
Thank you very much, Best. You can hear me okay?
Yes.
Brilliant. Thanks very much. And I don't have a slide deck to present. So I'm very happy to be here. Thank you very much and good afternoon, friends. And before we get stuck into today's talk, which will be from my perspective on the role of social finance in the future of accounting and finance in Ireland in particular, but is applicable across the globe, I thought it would be appropriate to set some background context of what our own organisation is all about and why Coyote Popola felt it useful to introduce me to this gathering today. And because we don't have much time, in its briefest form, Community Finance Ireland is an all-island provider of social finance, social loans, available exclusively to all volunteer-led organisations who are delivering social impact, have the authority to borrow, and can demonstrate an ability to repay. And since 2001, we've invested over 130 million into a range of communities, including sports clubs, charities, and churches, to name but a few sectors. For more information, I would refer everybody directly to our website, communityfinanceIreland.com, and I'd encourage you all to either join our mailing list or reach out to me directly on LinkedIn when time permits. Now, I could start this afternoon talking about Wall Street. I could throw out a few numbers from the FTSE, the Dow, or some other acronym designed to make me sound clever, and half of you would be asleep before I'd finished. But I'm not going to do that because today's story isn't about New York or London. It's about Donegal. Yes, Donegal is a very small town in the rural west of Ireland. Because if you want a glimpse at the future of accounting and finance in Ireland, in particular, don't look up at skyscrapers, look out to the village hall. So we'll rewind about 25 years. Picture this, a drafty hall, roof half caving in, paint peeling off the walls like the aftermath of the famine, heating that only worked if you gave it a good kick. One of those places you drive past and think, that's not going to be there in a year. But the locals loved it. They needed it. It was their drama club, bingo night, their gathering place. It wasn't just bricks and mortar to them. It was the heartbeat of the community. The trouble was that heartbeat was fading. The roof needed replacing. The place needed serious work. At what cost? About €50,000. Now, in the grand theatre of global finance, that's loose change. But for a rural village, it was like climbing Mount Everest. So they did what everyone does. They went to the banks, and the banks laughed. No collateral, no steady income, no chance. On their spreadsheets, these people were invisible, worthless even. But Community Finance Ireland looked at the exact same situation and said, yes, we gave the loan, the hall was saved, the loan was repaid early. And here's the thing, the real return wasn't the repayment. The real return was kids learning drama, people reskilling, families coming together. That hall is still standing today. And it's not just a building, it's a hub of pride, belonging, and opportunity. And that, my friends, is social finance. It's not charity, it's not a handout, it's capital with a conscience. It's finance doing what finance was always meant to do. Back people, back ideas, back communities. And now you might be sitting there thinking, lovely story, but I'm an accountant. I live in a world of balance sheets and audits. I don't do bingo halls in Donegal. But that's where you're wrong, because the story is about you. It's about your profession. It's about the future of accounting itself. Let's zoom out for a moment. We all here in Ireland remember 2008, the financial crash, the collapse, the queues outside Anglo-Irish Bank, the economy tanking, and people discovering overnight that the Celtic tiger wasn't a tiger at all. It was a kitten hopped up on cheap credit. That crisis wasn't just a financial collapse. It was a collapse of trust. The public saw a financial system that had become detached from real life. Balance sheets stuffed with assets that weren't assets, profits that weren't sustainable, risk models that didn't understand risk. And what was the mantra that drove it? Maximize shareholder value. That was the holy grail. That was the rule book. And it failed spectacularly. Ever since, people have been asking different questions. Not just how much did we make, but at what cost? For who? With what impact? And that's where social finance comes in. It's not a sideshow. It's not a quirky corner of the sector. It's the antidote to the madness of 2008. It says finance isn't just for accumulation, it's for transformation. It says money isn't just about return on equity, it's about return on community, return on environment, return on trust. And that's a word I will come back to again and again and again today. And here's the crucial part. Those questions about impact, sustainability, value beyond the financial, they are now reshaping your profession. Because who translates these questions into something credible, measurable, investable? It's not bankers. It's not regulators. It's accountants. And that Donegal Hall, that's not just a nice story. It's a signal that when you start accounting not just for income, but for impact, when you start measuring not just what money earns, but what money enables, you're not just recording history, you're shaping it. So this afternoon isn't about hedge funds or derivatives. It's about how a repaired roof in Donegal tells us something profound about the next 25 years of your profession. Because the real question is no longer, what can accountants do for social finance? The question is, how will social finance transform accounting and finance? And that's where we begin. So let's step back from the Donegal's Village Hall for a moment and look at the bigger picture. Because what happened there is a community project that no commercial bank would touch, but which turned out to be both financially viable and socially transformative. It isn't an outlier, it's a signpost. In fact, it's a compass. And I'll refer to this compass quite a bit. It tells us which way finance is now pointing, whether the mainstream system realizes it or not. The old compass, the one that guided Irish and global finance for decades, is broken. The needle used to point in one direction only. That mantra again, maximize shareholder value. That was the gospel. The line repeated endlessly in boardrooms and business schools. Profits above all else. Everything else, workers, environment, community, trust, was considered secondary, sometimes even irrelevant. Now, where did that compass lead us to? The crash in 2008. Ireland's 64 billion euro bank bailout. Ghost estates sprouting up across the Midlands, young people emigrating in droves, trust in finance, in government, in institutions, all shattered. That was the moment many people realised something fundamental. Finance had lost its bearings. It was no longer guiding our society towards prosperity. It was steering us into storms. So how do we navigate differently? This again is where social finance enters the scene, not as a charity do-good or option, but as a new compass for the entire system. Because social finance doesn't ask, what's the quickest return? It asks, what's the meaningful return? Think of it as upgrading the software of finance. The old program ran on one single metric, profit. And the new program runs on multiple metrics. Profit, yes, but also purpose, sustainability, inclusion. And here's a crucial part. It's happening right now, globally. Look around you. ESG investing is no longer optional. Trillions of dollars are now allocated based not only on returns, but on environmental and social governance criteria. The EU is rolling out taxonomy rules that demand companies disclose their sustainability impact. Investors are asking tough questions about carbon, about diversity, about governance. Pension funds, some of the most conservative capital in the world, are shifting their strategies to account for social and environmental risk. The compass is moving. And accountants, well, you're the ones who translate these new directions into numbers, reports, audits, and frameworks that businesses can act on. If social finance is the compass, accounting is the chart that makes it usable. The traditional accounting mindset is very comfortable with things it can measure easily. Cash flows, assets, liabilities, profit margins. But when it comes to the things that now matter most, community well-being, environmental impact, resilience, trust, the old toolkit starts to look a bit flimsy. Social finance forces us to confront that gap, because when you fund a Donegal Hall or a renewable energy co-op or a social enterprise, you can't just measure repayment schedules. You have to measure outcomes, how many jobs created, how many emissions avoided, how many young people retained in the community. That's accounting 2.0. That's where the profession is heading. Not just counting the money, but counting what the money does. And let me make this clear. This isn't about replacing profit with purpose. It's about recognizing that profit without purpose is brittle. The Celtic Tiger we had in Ireland was profitable until it all collapsed. Profit with purpose is resilient. A community hall loan repaid early is just one small example of that resilience. Multiply it across thousands of projects, and you get an economy that can withstand shocks far better than one built on speculative returns. Think of the compass metaphor again. If you're at sea with the broken compass, you can sail fast, you can be efficient, you can even boast about how quick you're going, but you're lost. You're heading straight for the rocks. That was Ireland in 2008. Now imagine you've got a working compass. You might move slower, you might stop to correct course, but you're heading somewhere sustainable. And that's the promise of social finance. Because in a decade, it won't be enough to say we made 10 million euro profit. Investors, regulators, and communities will ask, yes, but how? And with what impact? The Donegal Hall is just a prototype. The real challenge is, how do you build a profession that can answer those questions at scale? That's why social finance matters. It's not a side street. It's a new compass. And if you're smart, you grab hold of it now, because this is where the future of accounting is heading, whether we like it or not. So we've established that social finance is the new compass. It's pointing us away from the obsession with short-term profit and towards a broader definition of value, one that includes social return, environmental sustainability, and community resilience. But a compass is no good without a map. Accountants and finance professionals are the ones who actually draw the maps, who set the boundaries, who write the rules that others follow. And here's the problem. The old rule book is written in a dialect that no longer matches the world we live in. Take your traditional set of financial statements: income, expenses, assets, liabilities, equity, a neat and tidy framework. But what does it leave out? It leaves out that carbon a company emits. It leaves out the community impact of a decision. It leaves out the social fabric torn when a factory shuts down and jobs are lost. It leaves out resilience, trust, sustainability, the things people increasingly care about. The rulebook we've inherited was built for a world where profit was king, but profit alone no longer tells the story. And this is why the profession has been forced to evolve. Look at the EU. It's rolling out the Corporate Sustainability Reporting Directive. Thousands of companies now legally required to report on their social and environmental performance with the same rigor as their financials. Look at the IFRS Foundation. They've set up the International Sustainability Standards Board to create global reporting standards for ESG. Look at investors. BlackRock, State Street, the biggest funds in the world. They're demanding not just quarterly numbers, but credible long-term impact metrics. Accountants who believe their job ends with the balance sheet are going to be left behind, because businesses, investors, regulators, even customers, they're all asking for a different story, told in a different language. And if you can't tell it, someone else will. Think back again to the Donegal Hall. A traditional accountant might have said, look, the numbers don't work. But a social finance accountant says, hold on, let's measure differently. Let's account for the commitment of the community, the social benefits, the resilience generated. One is bound by the old rulebook and the other is writing a new one. So what does this new rulebook look like? Well, first of all, it's multidimensional. It doesn't stop at financial capital. It considers social capital, human capital, environmental capital. It acknowledges that a company draining community trust or depleting natural resources is just as reckless as one burning through its cash reserves. Second, it's long-term. The old rulebook prized quarterly earnings. The new one looks at sustainability across decades. After all, what's the point of maximizing profits today if you destroy the very conditions that allow profits tomorrow? Thirdly, it's transparent. Gone are the days when companies could hide behind glossy CSR reports filled with photos of smiling children. Stakeholders are now demanding audited, verifiable data on impact. Numbers, not slogans. And accountants are the ones who provide that credibility. Now, let me poke a little here, because we Irish know a thing or two about creative accounting. We remember the property bubble, the developer valuations, the balance sheets that looked healthy until they collapsed overnight. The old rulebook allowed for a lot of wink and nudge practices, but this time the scrutiny is global. If you fudge an ESG disclosure today, you're not just playing games with the bank, you're misleading regulators, investors, civil society, even your own employees. The reputation risk is enormous. So the new rulebook demands not just technical skill, but moral courage. It asks accountants to move from being passive recorders of history to active custodians of trust. And that's uncomfortable, I know, because it blurs the line between numbers and values, between finance and ethics. But let's be honest, that line was always blurred. Our old mantra of maximize shareholder value was never neutral. It was a moral choice dressed up as a financial formula. The difference now is that we're being honest about it. Here's the exciting bit for Ireland. We have a chance to lead here. We've already lived through the cost of following the old rulebook too faithfully. The crash, the bailout, the austerity. If anyone understands why a new rulebook is needed, it's us. And in Community Finance Ireland, in social enterprises up and down the country, we already have living laboratories of how to do that finance differently. Imagine if Ireland became the place known not just for low corporate tax rates, but for pioneering a new model of accounting that measured what really mattered. Imagine if the skills professionals like you bring, rigor, credibility, trust, were applied to shaping a financial system that people actually believed in. That's the prize. But to get there, you need to step up. You need to embrace this new rulebook, not resist it. Because if accountants don't define the standards, others will. Tech companies will. Consultants will. NGOs will. And suddenly the profession will be playing catch-up rather than leading. But now we come to another question. How do we actually measure this new reality? Because let's face it, accountants love numbers. They love order, clarity, columns that add up. But the world we're now being asked to measure is messy, it's human, and not easily reduced to a single figure on a balance sheet. Take your old school set of accounts. Profit and loss, balance sheet, cash flow. Very precise, very clean. It's like listening to a symphony played with only one instrument. It's nice, but it's incomplete. Now contrast that with social finance. Suddenly the questions aren't just, did we make a profit? They're, did this project reduce carbon emissions? Did it create jobs in a place that had been hollowed out by immigration? Did it improve health outcomes or reduce inequality or strengthen resilience? These are not add-ons. They are the essence of what value means in the 21st century. And unless we measure them with the same discipline that we measure profit, the whole project risks just becoming rhetoric. So how do we measure what matters? Well, let me give you a few lenses. First, there's social return on investment. This is the idea that for every euro invested, you can quantify the wider benefit to society. For example, Community Finance Ireland funds a local sports club in Mayo. On paper, it's a loan with repayments. But if you dig deeper, fewer young people end up in hospital with preventable illnesses. That's a saving for the health service executive. Volunteers give their time, which has an economic value. Local businesses benefit from increased footfall when matches are played. This isn't theoretical. Community Finance Ireland's own 2024 social value report, conducted with independent experts, found that for every euro invested, €4.85 in social value was generated. That's not soft stuff. That's a hard return, just in a different currency. Secondly, there's theory of change. And at its heart, this is just common sense storytelling with rigor. You map the chain, input to output to outcome to impact. So let's say €50,000 goes into a community theatre in Galway. That's your input. The theatre can now put on more shows and hire staff. That's the output. Audiences grow, local tourism increases. There's the outcome. The town experiences more cultural vibrancy, pride, and revenue. There's the impact. Suddenly, the whole story is traceable. It's no longer a fuzzy anecdote. It's a logic model that investors, funders, and regulators can follow. Then there's balanced scorecards. Traditionally, these were management tools measuring things like efficiency and growth. But with social finance, they're being expanded. So you don't just track revenue growth, but also jobs created, carbon saved, people engaged, community well-being. Imagine companies publishing not just a financial scorecard, but a social one. And suddenly, the bottom line is plural. And here's where you, the accountants, become crucial. Without your discipline, these tools risk being written off as marketing fluff. Anyone can produce a glossy brochure with smiling faces, but only accountants can embed these metrics into credible frameworks, audited and verifiable. That's what transforms trust. And this trust that I return to so often is the most valuable currency of all. Think back to the crash of 2008. What really collapsed wasn't just banks, it was trust. Trust in markets, in regulators, trust in the numbers themselves. People looked at balance sheets and realized they were castles built on sand. And that wound still lingers here. Social finance offers a chance to rebuild trust, but it only works if the measurement is credible, and credibility is your superpower. So let me give you a practical illustration. Imagine two reports land on an investor's desk. One says, this project improved community well-being. The other says, this project generated €2.3 million in avoided health costs, created 56 jobs, reduced carbon emissions by 400 tons, and increased local volunteer hours by 8,000. Which one do you think gets funded? Which one do you think attracts follow-on capital? Same project, just measured differently. Now, I'm not naive. Measuring social outcomes is harder than measuring profit. Profit is clean, social impact is messy. But messy doesn't mean impossible. It just means we need to use new lenses, new frameworks, and new language. The accountants who master these frameworks will become indispensable because governments, investors, and communities, they're all crying out for this kind of credible translation. But there's another dimension here. Measurement isn't just about proving impact after the fact. It also shapes behavior. If you measure only profit, businesses will maximize profit, whatever the collateral damage. If you measure social outcomes too, suddenly decisions look different. A project that pollutes but pays well becomes less attractive if the true environmental cost is made visible in the accounts. Measurement drives behavior, always has, always will. There's an old saying that goes, what gets measured gets managed. Well, I go further. What gets measured gets funded, and what gets funded gets built, which means that the choice of metrics isn't just a technical detail, it's the foundation of the future we build. Step into this space. Don't shy away from the complexity. Embrace it. Learn the tools, SROI, theory of change, balanced scorecards, ESG frameworks, because the minute you make social impact measurable, you make it investable. And that's the turning point. That's the bridge between nice ideas and real transformation. So let's bring this home. We've talked about the compass, the new rule book, the challenge of measuring what matters. But now it's time to ask, where do you fit in? What's the role of accountants in this new era of social finance? You're not bystanders waiting for policymakers, NGOs, or tech entrepreneurs to solve the big questions. You're right at the centre. The profession of accountancy is about to become one of the most important shapers of our economic future. Why? Because every great shift in finance depends on credibility, on that trust, on verification. Ideas are cheap. Capital is cautious. Investors don't write checks because someone says, look at all those smiling faces in a brochure. They write checks because the numbers stack up, because the impact is clear, because someone they trust has said, yes, this is real, and that someone is you. In the old world, your role was clear: track profit, minimize risk, make sure the numbers were accurate, and ensure compliance. It was a noble role, but often an invisible one. But in this new era, the role is changing. You are becoming the strategists, the navigators, the ones holding that compass. Because if value is being redefined from profit alone to profit and purpose, then you are the translators of that value. You're the ones who decide how it gets reported, recorded, and recognized. Think about that. For the first time in generations, your profession isn't just reflecting the economy, you're helping to redesign it. In the 20th century, accountants were the guardians of shareholder capitalism. In the 21st century, you can be the architects of stakeholder capitalism. That's not a technical shift, that's a civilizational shift. Now, I know what some of you are saying and thinking, that sounds grand, but I've got tax returns due on Friday. Fair enough. The day-to-day won't vanish, but alongside the audits and the filings, there's a bigger role emerging. And those who lean into it, I say again, will become indispensable. Think of the community hall we started with in Donegal. Imagine multiplying that across Ireland. Renewable energy co-ops, community housing trusts, social enterprises tackling loneliness, local sports clubs keeping young people engaged, each one funded, measured, and validated with the same rigor as any multinational's balance sheet. That's not just accountancy, that's nation building. Isn't that a more exciting legacy than just ticking compliance boxes? Isn't that the kind of profession you'd want young graduates to aspire to say, I didn't just crunch numbers, I helped redirect billions into projects that made my community stronger, greener, fairer. Measuring what matters is the new frontier. But this raises a very practical question. What skills will you need to thrive in this new era? The toolkit that got you here won't be enough to get you there. The old toolkit was designed for a world of balance sheets, profit margins, and tax compliance. All essential, yes, but incomplete. The accountant of the future will need a broader skill set, one that blends technical mastery with new literacies of impact, ethics, and communication. Skills such as mastering impact frameworks. This is the grammar of tomorrow. Just as debits and credits were once essential language of the profession, the next grammar is impact. Frameworks like the Global Reporting Initiative and social return on investment are not optional extras. They're the building blocks of how companies, investors, and communities will communicate value. Skills such as integrated reporting, a single coherent narrative where financial performance and environmental, social, and governance performance are reported together, because frankly, they are intertwined. A company with rising profits but soaring carbon emissions is not sustainable. A project with a clean balance sheets but toxic community relations will never survive scrutiny. Skills such as stakeholder management and engagement. The accountant of the future will need to step out and engage with investors, regulators, employees, communities, sometimes even activists, because value is no longer defined solely by shareholders. It's defined by stakeholders, the people who are affected by a business, either directly or indirectly. Skills such as ethical risk assessment. The primary risks you worried about were financial, liquidity, solvency, credit, market volatility, important, but in the new era, ethical risk is just as critical. Ask yourself, does this investment exploit vulnerable workers? Does this supply chain rely on unsustainable practices? Could this project backfire socially, even if it looks profitable on paper? Ethical missteps aren't just bad headlines, they're balance sheet liabilities. Finally, and perhaps more importantly, the accountant of the future must learn to tell stories with numbers. Not spin, not hype, but clear, compelling narratives that make €1 million in avoided health costs as visible and powerful as €1 million in profit. Because if you can't communicate impact, it doesn't exist in the eyes of investors, policymakers, or the public. And to close, the future of finance isn't just digital. We know the digital revolution is happening. It's already here, and every year it accelerates. But if that's the only story, then we're missing the bigger picture. The future of finance is not simply a question of apps and algorithms, of blockchains and bots. The future of finance is ethical, it's inclusive, it's transformative. It's where social finance intervenes. Think of a great oak tree. You see the branches, the height, the strength, the life all above the soil, but none of that is possible without the roots below. Social finance is that root system, deep, resilient, often invisible, but utterly essential. And like any root system, it doesn't grow wild, it needs tending, it needs gardeners. That's where you, accountants, come in. You're not the ones grabbing headlines or cutting ribbons. You're the gardeners. You decide which seeds get watered, which roots get supported, which branches get to grow tall. You decide by what you measure what counts. And here's that simple truth again. What gets measured gets funded. What gets funded gets built. And what gets built shapes the future. Now think about that for a moment. Entire communities rise or fall depending on whether someone somewhere put a tick in a spreadsheet or gave the green light to a funding structure or signed off on an impact report that proved the value of a dream. Now that's extraordinary power, quiet power, the kind that doesn't shout, but the kind that changes lives. Over the last 25 minutes, we've looked at social finance as the compass pointing us forward, at the new rulebook of impact, at how we measure what matters, and acknowledge that there are new accountancy skills needed going forward. Now let's pull all of that together, because the next 25 years are going to ask a very simple question of this profession. What side of history do you want to be on? Do you want to be the guardians of an old model? A model that measures profit but not purpose, that counts euros but not emissions, that tallies dividends but not dignity? Or do you want to be the gardeners of the new model, one that measures impact, one that nurtures communities, one that leaves that soil richer than when you found it? Put in human terms, in 25 years' time, someone will stand up in a village hall in Donegal, or a community centre in Cork, or a sports club in Belfast, and they will tell the story of their transformation. It might be about a renewable energy project that kept money in the town instead of sending it to London or New York. It might be about a disability support organisation that gave a child independence. It might be about a migrant church that became the beating heart of a new community. And when they tell that story, I want them to be able to add one line, a line that seems small, but in truth is huge. And our accountant made it possible. That's the vision. That's the legacy. Because when you strip away the jargon and the framework and the case studies, this is what this is about. It's about giving communities the chance to dream, and then the means to make those dreams real. Economic volatility, climate shocks, social fragmentation, they're all on the horizon, but with the root system, with the correct root system, with social finance at the foundation, communities can withstand those storms. And with the right gardeners, with you accountants, those roots will not only hold firm, but they will spread. So here's my challenge to you. Don't just see yourselves as accountants. See yourselves as architects of the possible. Because in 25 years, when that story is told in that village hall, you don't want to be forgotten. You want to be remembered as the quiet hand that made it possible. And that is why the future of finance isn't just digital. It's ethical, it's inclusive, it's transformative, and it starts with you accountants. Thank you everyone for your attention.
Thank you very much, Donald. That was very, very, very insightful. I'm pretty sure I speak for myself and for everyone on this platform. We really appreciate the nuggets. We've learned a lot. We've learned that we should consider all stakeholders, not just the shareholders, in all our doings, whether as an internal or external auditor, or you're the one preparing the financial statements. We've also learned that profit with purpose is very resilient. Yeah. We have a few questions. The first one says, given a capitalist mindset that businesses have, how do we sell social finance to people? I would say, just to add a little more flesh to this, the average, investor, is returns driven. So, how do you convince them? That's the first one. So you can go ahead and answer.
This comes very much back to the point that I made about reporting. And we can't do this alone. And we need the accountants to buy into those measurement frameworks and to be able to build that into all the practices that they do. Businesses left alone to their own devices won't pay this an awful lot of attention. But where we work alongside the accounting professionals, we will be able, the law is on our side as well. Businesses will have a legal obligation to show the CSR reporting, and it will be, as time goes by, investigated more and more thoroughly. And simply throwing money, a small level amount of money in comparison to the profits that you're making to offset fossil fuel exploration, etc., isn't going to cut it. Society in general is becoming more open and awake to this fact. And therefore, if they want to get investments themselves into their companies to expand and grow, they too will need to be seen. They too will need to be shown at the amount of impact that they're creating locally. Does that answer the question?
Yes, I think that does. Thank you very much. Just one more other question. This one says, is it right to assume that only development institutions, development funds institutions support community finance, or do private investors support? If private investors do, what will be the expectations beyond social benefits?
Yeah, and that's a very good question. So in the Republic of Ireland, most of our investments to date have been financed by Irish banks. So Irish bank finance will have been bankrolling a lot of the activity that we will have been doing in the Republic of Ireland. Now, of late, what we have started to do is attract new investors in with a more philanthropic mindset, but providing a commercial return. So we will provide an interest rate coupon of 2% to our investors, but we will also provide them with bespoke social impact reporting, independently carried out. So we can hold our hands up and say that we aren't biased in our reporting. This has been carried out by external agencies with a profile across government departments in the UK, etc. So that's what they would get above and beyond the commercial return, but they would get a commercial return as well as that bespoke social impact reporting. And I mentioned earlier on, well, I didn't mention earlier on, our credit record is very important in the story. So if we've put 130 million euro on the ground over the last 25 years, we have lost about 0.63% of that money. So 0.63% is all that has been lost of that 130 million. And bear in mind that at least 50% of the money that we have been investing has been invested on an unsecured basis. So our business is built on relationship building and on trust. And I know Coyote, and we'll have dealings with Coyote and many of his colleagues in Ireland over the years. We put an awful lot of trust and kudos into personal relationship building with our clients. And that's so important for us. And we want to do the same with our potential investors into the future. It's no good really for us best to be working with faceless banks. We don't know where the money is coming from into the banks. So it's not the purest form of community finance. So if we can work with charitable foundations and philanthropists and even other sort of charitable groups, we would see more pure form of community finance going out and delivering real community impact on the ground, but not as a gift, as a commercial transaction that will be recycled and recycled and recycled to ensure multiplicity of impact going forward. Grants are great, but they're one-hit wonders. And we are in favor of encouraging the recycling of that sort of social finance support to ensure multiplicity of impact into the future.
Thank you very much, Donald. On behalf of the Institute of Chartered Accountants of Nigeria, we would like to thank you very much. This has been very, very insightful. Thank you very much once again on behalf of everyone. On this note, I would hand over to Soburu to take the next one. Thank you very much.
Yeah, thank you. Thank you so much, Donald, once again. That was a very powerful message. Again, you're taking us away from conventional finance thinking to much more alternative that is also growing in this particular time. Again, we start seeing IASB2 as well, like issue standards, and they're looking at the consideration of social financing. You see that IFRS 9 issued and consideration for accounting for some of these instruments as well. So thank you so much. That was very insightful. We would be moving on to the third technical session. As usual, I would call on another professional colleague who would summarize the synopsis of that third topic, and of course also help us introduce the next speaker. I would hand over to Jochemi Ame, ACA, to please run us through that. Over to you, Chemi.
Okay. Good afternoon, everyone. Our third technical session today is on navigating digital transformation in finance, leveraging technology for enhanced financial reporting and risk management. This will be presented by Ben Afudego, and a summary of this session's A summary of this session is exploring the impact of the digital technologies on the finance and accounting profession. And Mr. Ben Afudego will examine how innovations such as AI and blockchain and data analytics will reshape the financial operations and reporting and decision making. Mr. Ben, if you start to the next page. Thank you. Mr. Ben is the consulting leader for EY West Africa with over 25 years of professional services experience across Africa and Europe, including work with FTSE 100 companies. He also has led transformative projects in risk culture, regulatory compliance, internal audit, ERM, corporate governance, and procurement systems across multiple sectors and countries. He served as engagement partner for top-tier organizations, including BUA, BOA, Seplat, EcoBank, First Bank, UBA, InterSwitch, and Access Bank. His leadership has shaped enterprise risk strategies, ICAP reviews, and P2P process designs for governments and private institutions alike. He holds a BSc and MSc in Economics and Statistics from Moscow State University of Economics and Statistics. He's a fellow chartered accountant and a fellow certified chartered accountant. We'll now welcome Mr. Ben to take us through the session.
So much, Chime. Good afternoon, everyone. Good afternoon, delegates. So I think I have permission to share my slides, right?
Yeah, please proceed. I'll stop sharing now, so please proceed.
Okay. See my slide?
It's coming up. Yes, it's up.
All right. So thank you all so much for today. Sorry. I think you can see the correct slide now. So thanks for giving me the chance to talk to you today. And I guess I am the last presenter, so I am between yourselves and your lunch. Okay. Trying to take out the let's kick on. So it's kind of how do I put it? Very interesting coming between a very technical session where we spoke about technology in finance and accounting. And then we looked at Donald's section, which talked about social financing, very emotional and very touching. So let's go back to how digital transformation is affecting finance as to whether we need the outcome for corporate profit reporting or for social impact assessment. One thing that is very clear is that we need information out there that can be trusted. And that information, because of the volume of information that accountants have to deal with, is best enabled with technology. There are many technologies out there, and I think that are being used to digitize or automate the work of accountants and finance professionals. So let's touch on a few of them and why they are so important, what we do. Technologies that most people are adopting, some of them may not be that new, but there are new faces of such technology are ERPs, RPAs, and AIs. And I'm going to spend some time this afternoon in the next 20 minutes or so to unpack how best we can leverage that. Users of financial information, for whatever purpose, want information in a way that they can easily access it. So we need to use technology to empower them. We need to give them real-time information such that they can get the insight they need to make decisions. It is also important that in doing this, we as accountants are equally being held responsible to make sure that the information we push out can be trusted. So trust is key. And therefore, in adopting technology, we need to ensure that controls are embedded in them to ensure compliance with standards and compliance with regulations. So these are the very important things that we need to consider in making decisions about technology adoption. So let's look at some of the technologies that are out there that we could consider. 3 of them were mentioned by Muyiwa in his previous presentation, and I'll recap them. Enterprise resource planning solutions, which try to digitize the backbone and integrate the transactions that go around in an organization and try to present them, if possible, in real-time, accurate manner for us to consume. Having established that, organizations, some of which I work for and perhaps you work for as well, are looking at how best to, excuse me, I need to swap the screens, are looking at how best to improve on efficiency of the accounting activities they perform, and therefore looking at way of eliminating repetitive tasks. And RPA does that very effectively. So we'll explore that as well briefly. And then AI is another area that helps us to leverage all the information we have on our systems to predict what business decisions we are most likely to make, or aid us to make that decisions as humans as effective as possible. Now, there are a lot of technology platforms that we can use as ERPs. The big 3, we'll call them, could be Oracle, SAP, and Microsoft. But there are so many others. Okay? But we'll just focus on the big 3. But in all of them, we expect ERPs to adhere to accounting standards and regulatory requirements. We expect ERPs to help us manage essential financial activities, passing journals, trial balances generating, making payments possible, making invoice processing possible, track our fixed assets, managing our bank accounts, doing reconciliations, etc. All of this, we expect a good ERP to be able to do that for us. And some of these systems have been designed largely to be able to do that. When you put it all together in visual, what you are expecting your ERPs to do for you is obviously connect all your functions within the organization in a way that can give the finance function the ability to report accurately to the stakeholders. And in the stakeholders, I'll broaden it, leveraging some of donors' expectations, that we are talking about reporting to your shareholders because they are looking at ROI, reporting to the employees because they are interested in the bonus that they get at the end of the day and management, but also reporting to the community at large about the impact that we are making, that the organization is making. But your ability to provide all these insights to your various stakeholders is largely depends on the capability of the ERP that you implement. But at minimum, we are expecting that the finance function will drive its ERP to be able to provide sales information, procurement information, human capital related information as to whether it's the nominal role or the payroll, your core production activity information, as well as projects, large projects to transform the organization, large project to transform your workforce or your technology and environment, or projects or programs designed to support the communities in which you operate. Those of us in Nigeria can relate to some of the activities of our oil and gas companies and how we expect them, or in fact, some of them actually are very deliberate about the things they do in the community such that they can operate in those communities sustainably. In doing all of this, though, we expect that the data that is collected through the transaction we record can give us financial accounting related information, management information, management accounting information. But now, having listened to Donald this afternoon, I'll add social impact information. We need to be able to design our ERPs to be able to give us such information, such that we can pass this information onto the public, onto our stakeholders, to understand what our organizations are doing across the board. There are a lot of trends that are impacting the choice of the ERP or technology that an organization would go for. Again, if I focus only on the big three and what they are doing, and perhaps all the others are doing the same because they are all leveraging the cutting edge technology solutions that are becoming available. You see the likes of SAP moving from ECC to S/4HANA, and they've given a deadline by which that must be done, which is end of 2027, which means that if you are currently an SAP solution user or platform user, you need to have a migration plan. Microsoft has also leveraged Azure to move Dynamics 365 onto the cloud and made it cloud native. Oracle is also aggressively moving its ERP suite through the cloud onto Oracle Fusion. These latter two do not have deadlines yet for transition, but it's obvious that we do not have a lot of time in keeping our ERPs on-prem. We need to start looking at how we move them on into the cloud, or have a blended solution, hybrid on-prem cloud solutions. Analytics is giving us a lot of power through AIs to be able to provide insights, and a lot of finance functions are leveraging them. Users of financial information are looking for real-time insight, and most of them are looking for you to give them the solution or the insight in their mobile devices, because all of us are using that at the moment. And these technologies are adapting quickly to be able to do that. The regulators are not relenting at all. Some of them are playing catch up, but then they are making sure that whatever is happening in the trend of technology, they are able to regulate them. And our accounting profession, our accounting regulators are also not relenting on regulating the practices of the profession. So therefore, we have to make sure that the ERPs we implement have those capabilities to ensure we comply all the time. And data quality, data governance, data privacy are big things across all geographies. And these ERPs are also embedded that into their solutions. So when you decide to make a decision on the ERP you want to go for, the first and foremost starting point is to understand your current situation. What's your maturity with respect to ERP adoption? And that should help you develop an ERP strategy. There are three things that I'll suggest you consider when you're looking at your ERP strategy. Number one, it must be human-centric. Number two, it should be data-led. And number three, it has to have a value focus. So let's unpack these three quickly. Human-centric means that the CFOs or financial controller need to be able to develop an ERP strategy that has an inspiring vision. The reason why you are implementing it must be very clear so that it can have buy-in from the organization.
It appears like we've lost Mr. Ben. Jim, can you hear me? Yeah.
Yes, I can.
Yeah, probably give him some
Yeah.
few minutes to connect.
Yeah, because he's still on the call though.
Oh, I see. Yeah, I think he's back on the call. Yeah, he's still on the call.
The level or the kind of solution they will select. And therefore, that must be considered when you are making your ERP or developing your ERP strategy. And the kind of insights your stakeholders are looking for upon completion of your ERP solution must determine the kind of data elements that you create or you enable your ERP solution to collate for you. So when we listened to Moiwa, he talked a lot about how your ERP can help you match your transactions. And AI can enable that as well. But we heard Donna talking about how we need to build capacity and capability to report on the social impact we are making on organization. If you do not create the data elements or data points in your ERP solution, you will not be able to give that information to the stakeholders, even if you have the desire to do so. So in designing our ERP strategy, we need to consider the outcome that we are looking for. And last but not the least is the value. The value this ERP would give the organization, the speed of reporting, the accuracy of reporting, the ability to comply with standards and regulations are the key factors that you have to consider when you are developing your ERP strategy. So that is about ERP. I said there are three key technology enablements that I want to consider. Time is moving fast, so let me go quickly through the RPA. And I think Moiwa touched on that already, so I'm not going to spend too much time. But RPA is a game changer. Organizations that I have helped deploy RPA which literally is a bot, is a software that mimics human behavior. And therefore, if it takes 20 people to do a reconciliation in a bank, you can actually use one bot to do that reconciliation. The moral discussion has always been, what will I do with those 20 people that used to do the reconciliation? Am I going to lay them off? The answer is no. Where we have done this in the past, you see such people deployed to perhaps client-facing activities or more regulatory compliance activities. They are still in the organization, adding value to the organization. So what will happen to your current FTE should not be the reason why you cannot leverage solutions like RPA that will bring a lot of efficiency and accuracy in your financial accounting and reporting. It gives you speed, it gives you accuracy, and to a large extent, it frees up skills for more impactful business decision making. These are some of the benefits. Because RPA is designed, RPA is designed in such a way that it's ERP agnostic or core banking or any software agnostic. You can apply it on any existing IT structure, architecture or infrastructure that you have. You can have 1 bot, 2 bot, 3 bot, 10 bots, depending on the volume and things you want to do. So it's really scalable and it's flexible. It gives you enhanced level of accuracy and completeness of your record. It enhances decision making. I cannot but emphasize that indeed it does save cost, which you can deploy that savings on something more social, impactful to the organization and to your stakeholders. Efficiency is one of the things that you'll get from deploying your RPA. So it's a good thing to consider. Some use cases, you can see it on my screen. We've used it for clients in the AP space, in the AR space, in bank reconciliations or ATM reconciliations or transfer reconciliations. We've used it for financial reporting and compliance and journal entry. Anything that a human being can do that has a lot of data points, volumes of transaction, RPA can actually automate that and give it a lot more accuracy, and you can benefit from efficiency. So let's touch quickly on AI. And I think my previous speaker did talk on AI already. Muiwa spoke about AI and including showing some use cases. But it's just a machine-based system that makes inference from inputs and data that it has received or that has been stored in it, and it will generate outputs. Most of them are predictive in nature or to give you content, help you with recommendations, and that you can help you with your decisions. But it's important to know that sometimes it acts in an autonomous way from...
Apologies, Mr. Ben. Sorry for chiming in. Could you please share your screen? We're not seeing your screen again.
Okay, how did you lose? At what point did you lose me?
I think for some, like 15 minutes ago, you went off for a while, then came back after 1 minute. Then it's just to bring up the slide. We could hear you. We could hear you for like those 15
but
minutes.
You can't see my screen.
But we can't see this. Yeah, I see the slides. Yeah. Thanks.
Okay. Can you see my screen now?
Yeah, it's coming up.
Can you see my screen?
Yes, it's up. Yes, it's up.
Okay. Can you still see the screen?
Yes, please. Thank you.
Okay, thank you. Sorry for that.
No worries.
So, okay, I'll share the slides anyway, so you'll be able to see whatever you lost. Okay, apologies for that. So where I was the fact that Muiwa has spoken about AI and even showed us a use case, so we already know what it is. But the most important thing is that it will leverage any information that it sits on or it has and give you an output, sometimes predictions, content recommendations, but you have to use that information cautiously. AI has, or we know as we adopt these new technologies, we know there are embedded risk in them. I think there are 4 risk categories that have been identified with AI. And some of people think it can be harmful. That's the highest level of risk where it can impact human behavior. There's high risk, there's low, medium risk, and there's low or no risk, like 4 different risk levels. So you have to know what you are using and how you are using it, and make sure that you understand the risk inherent in the use of that specific AI solution and have measures in place to mitigate them. We as accountants, I mean, you can put your annual reports or your information on any of the tools. I don't want to sell any tools. I'm not going to call any of them. And it will give you the outcome that you are looking for. But then you still have to eyeball it and check it and make sure that it is really what you need. You don't quickly produce slides for your finance committee or audit committee leveraging AI tools and realize that the information is actually not correct because you haven't spent enough time looking at it and ensuring accuracy. So timeliness, yes, we'll get it from using the AI tools, but accuracy is still a human factor. We need to double check that before we use the outcome of these AI solutions. So one could say that, I mean, we've heard a lot of the use cases already. So all I'll say is a lot of organizations, as we interview CEOs about their plans for AI adoption, we understand 89% of CEOs have invested or plan to invest significantly in adoption of AI in the next 12 months. So as CFOs or finance professionals, I'm sure you've seen those budgets or you've seen those cost items on your budgets already. You stand the chance of not being up to speed or being significantly disrupted if you do not begin to invest in this solution. But invest cautiously because you still have BAU things that you need to do. And having, like, just the same way you had an ERP strategy, you equally need to have an AI deployment strategy for your organization and managing expectations as well as the cost as well as the risk inherent in whichever platform you intend to adopt. But we know if we do it well, real-time dashboard will become something that we can get. It will replace static reports that most people get. You get a month-end report, you go through your month close and you get your month-end report. But you can get it much quicker because we are understanding organizations that are adopting AI are able to do their month close much quicker. A use case, Metro Bank UK says they could do it. It has improved their time of closing the book by 40%. And I'm sure a lot of other organizations can say the same about the adoption of AI in some of their key activities. The benefit you get from it, whether from time savings or from money savings, is a factor of the manpower that you have around the use and deployment of it. So a few more slides and I'm done. I think I did mention that the global AI framework has some inherent risks. But then there are about 9 or something principles that guide the use of AI. So if you familiarize yourself with those principles, and those principles have been put in place to actually help mitigate the risks that are inherent in the use, then you'll be able to actually optimize the use of AI in your organization. There are ISO standards around using it, deploying and using it. But as accountants, the minimum that we expect is that whatever we do with AI, we should integrate fairness, transparency, and accountability into it. It must be ethical. We need to design it, we need to monitor it to make sure that it is ethical. So I just want to say, as I draw us quickly to conclusion, that if we leverage the tools that are out there, at least these three, the big three, ERP, RPA, and AI, we can significantly reduce the errors that we see in our financial reporting processes at the moment. We'll get more efficiency at the process. Silo mentality will go because the ERP is talking to all the data sets, all the functions across the board. So collaboration will become better. Scalability is there because, especially if you migrate to the cloud, you can quickly expand your organization and your data requirements by just going cloud and buying more. But it's cost, of course, you need to manage that cost. And real-time.
The speaker is frozen. Hello, Chemi.
Yes, sir. It's frozen for now. We'll just give him a couple of minutes and see if he comes back up.
Okay.
Yes, sir.
It's still on. Okay, I think it's maybe once.
And use this continuously. Advanced analytics is possible, and AI-driven allow consolidation, and therefore you can have real-time access to data. It improves monitoring if you're able to enable it. But the risk around cyber comes with any level of automation. We've experienced that already. So you have to equally continue to invest in your ability to protect the IT assets that you have. And last but not the least, we need to make sure that if there are regulations that affect your business, you build those regulations into your ERP systems, RPA systems, and AI solutions so that you don't trade speed and accuracy for breach of rules and laws. So finally, I'll say digital transformation in finance is actually not an option for anyone anymore. But you have to look at the size of your organization to select the solution that best fits your organization. I know I did mention the big four, the big three ERPs, but you can go for anyone that fits your budget. But you need to start considering a solution. And for us as accountants that do not have these competencies, we need to begin to build those skills. And I think we touched on that, or we touched on that earlier. Okay, you need to begin to build those skills. The future of financial accounting reporting is not just about, nobody is saying technology is going to replace what. Yes, there'll be disruptions. There will be disruptions. But if we continue to upskill ourselves, if we're good in doing debits and credits, now we should be good at using the ERPs and using the dashboard solutions. Then there'll be no disruption to you as an individual. But those people that will gain the new skills will be the ones that will be most relevant to the organizations. And finance and risk management must continue to leverage the same set of data to ensure that when you go to the board, whether it's board audit committee, board finance committee, or board remuneration committee, whichever committee you go to, because you are generating the data from the same data set, they will have the same picture around the risk and reward of the portfolio of business they are running and the business decisions that they are making. Thank you so much for listening to me. I know I was between yourselves and lunch, so now I can take your questions. Thank you.
Thank you very much, Mr. Ben. This was really insightful. We have a couple of questions, but before we do that, I'll just mention that someone will drop the link for us to register our attendance right now. So if you can please do that before we close out, that would be great. So thank you very much, Mr. Ben. There are a couple of questions for you. The first one is on how to choose an ARP point. And then, do you want to answer this first before I go to the next one? Or I should just read them all out?
You can read them. How many are there?
3.
Okay,
so,
go for it.
Okay. The second is that the ARP is an enabler, but what's the use of ARP without human intelligence? So what checks can we put in place if the AI tools are giving wrong interpretations? And then lastly, what do you consider responsible use of AI as it affects the user, the developer, and provider, factoring ISO 42001?
So let me see if I can take some of those questions. So to start, the starting point is how to choose an ERP. I think I tried to address that. You actually need to have a clear ERP strategy. And the starting point would be to do a maturity assessment. Some people don't have any ERP at all, so ground zero. So for you, depending on the size of your organization, you can choose the lower tier, the mid-tier ERPs. Because your budget, the size of the organization, less than 100 people working in the organization, your transaction volume may be maybe $1 billion or less. So you have to fit your budget to your choice of ERP. But then you need to have people, so that's on the value side, right? You need to have people that can manage the ERP that you have. So human-centric. If you go and deploy a complicated ERP of the top 3 in an environment where the capacity are barely able to manage spreadsheets, then you struggle with adoption. So you need to kind of gravitate to that point of being able to use the complex ERPs. Or even if you choose a big ERP, you can implement them in modules. The first one, you just get your GL trial balance, so you can prepare financial statement. Then you add your AP to it because you need to be able to do procure to pay. And then you may add your sales so that you can do your order to cash and that kind of stuff. So there are different solutions or different approach, but you need to have a strategy. And that strategy must touch on the 3 elements I mentioned: human-centric, data-driven, and value-enabled. Okay, these are the 3. Now, what is the use of ERP without human intelligence? I think you have actually answered the question. Because I said the first thing you have to consider in that your ERP strategy, it has to be human-centric. So you need to be sure that you have people that can pass the journals. You have people that can review the journals. If you are using AI to pass recurring journals every month because you want speed and you have a high volume of journals at the end of the month, and you want to improve on your period close, yes, RPA can pass those recurring journals for you. AI can do it for you. But you will check that the spreadsheet or the journal schedule is correct, and then to pass it for you. After it has passed it, you do your analytical procedures to check that it's correct before you can prepare your management accounts and report it to your management committee. So you can't take the human element away from it. That is why we say that the mundane task of accounting is going to be done by the technology, but you will do the intelligent part of it. The intelligent part of it is where you have to spend your time. Interpretation, accuracy, alignment with regulations, standard, etc. is where you will have to be more attentive to. Responsible use of AI. I think there was a line in my presentation that says, number one, it has to be ethical. Because if you use data sets that are biased from historic sources, I don't want to use some of the examples because sometimes they're a bit controversial. But there's this very common one which people use about you use data on lending, and because of the profile of the people that in the past were not able to get access to loans, by default, the AI will continue to reject such applicants because of their history. So you need to now build in mechanism to, if those people or that group of people were in the blacklist and therefore are not getting access to funding, you need to whitelist them. And that's a human process. You need to whitelist that category of people such that the tool can make positive decisions in their merit as long as they have the credit history, or they have the, how do I call it, the credit rating for their category to be able to get a product. You have to design products that can fit their profile as well. So it just has to be ethical, and you have to make sure that any biases in it are removed. It's one of the risks, one of the key risks that you need to deal with. But there are so many other things. Like I mentioned, there are 9 principles. If you follow all the 9 principles, you implement an AI solution that is acceptable to your organization and to the society at large. I think, Chime, I've addressed the 3 questions. And I don't know whether you have any more questions for me, or we'll wrap it up.
Yes, you have. So, do we still have time? And there's 2 more questions. I think we'll just take these 2 and then that's it. And it's that the mindset of technology, the mindset that technology will make the accountant unemployed is a fear. What's your take on that? And the second is the sub-Saharan African accountant looking into a genetic AI in finance?
Okay.
And before Mr. Ben goes on, the attendance link has been dropped in the chat box.
As well. For guys streaming live.
Yeah, so please stop putting your details in the chat box. Just sign in using the attendance link. Thank you.
Okay. Thank you, Chairman. So now, okay, let me take you back. Those of us who are a bit older, we recall the era of Lotus 123. Every accountant of my age would have done Lotus 123. And then we went into Microsoft Excel. And then we started adopting the smaller ERPs, Sage, Peachtree, Sun Microsystem, and then the Oracles, SAPs, Dynamics, Microsoft all started coming in. The accountants that did not move away from the ledgers, debit and credit, you see that book, even in our era, onto 123, Lotus 123, were disrupted. The accountant that did not move from Lotus 123 to Microsoft Excel because of the capability that it gave us, at that stage in their career, were disrupted. And I can apply that to moving from QuickBooks to Peachtree to Sage to the new era of moving into the cloud with some of these bigger solutions. So I think I've answered the question. Without saying it blunt, if you do not upskill yourself with the emerging technology, you will actually be disrupted. It's fundamental. So what we need to do as accountants is what we are doing today on this platform, to educate ourselves on the emerging trends in the profession and try to acquire the skills to remain relevant. If I have my organization A and I'm training my team on all these new skills, trust me, your organization B that is not training your accounting team on these skills will start applying to me. I'll take all of them away from you. Because the Gen Zs are interested in skills that will prepare their career. Gone are the days that you'll be an officer for 3-4 years. If you have an officer for 1 year or 2 years in your team, and they are not knocking on the door, when will I become a manager? Then there's a challenge. So yes, technology will disrupt, but it's not going to take away what we do as accountants in the short term. It's not. And therefore, we should continue encouraging our young folks to continue passing the exams and becoming ICAN professionals, because somebody has to interpret the outcome. And we are trained to be able to interpret the outcome of the financial results. And even to implement the ERPs. Guess who implements the ERPs? It's the same we. It's the same we that implement the ERPs. Because at minimum, you'll be a BA, we call them a business analyst, that will write the requirements for the software. And then you gravitate to become a configuration person where you configure the software or customize the software. But then there are those of us that are too old to do that. We will still have to receive the reports and interpret them and go to the boardroom. Sorry, the board won't go to the boardroom. You will still go to the boardroom, Mr. CFO. So I think I've answered that question. Now, on Gen AI's adoption in Sub-Saharan Africa, so we saw that on average, 89% of CEOs are saying they are going to invest in AI in the next 12 months. To be honest, that statistics is tilted more towards the advanced countries than our countries or Sub-Saharan Africa. I don't have the statistics on the percentage of Sub-Saharan Africa. I can dig to the data and find it. So it goes without saying, though, that if we want to have our organizations in Africa to be globally aligned, market leading, playing at the top with our peers, then we need to adopt the technologies that those guys are also adopting. Otherwise, we will always remain small. If, for example, we have a global organization, we know we do have a couple of global organizations in Nigeria, because I know, this is ICAN, so some of you are in Ireland and all over the world. But if you take a Nigerian company that wants to be global, want to list in London Stock Exchange, New York Stock Exchange, or wherever, if you're not delivering, if you're not leveraging some of these tools, you will not be as efficient, and your ROI will not be that great, and therefore it will affect your P ratios or your market valuation and everything. And therefore, whether we are in Sub-Saharan Africa or in advanced world, we need to consider favorably the adoption of some of these new technologies, including, to be honest with you, some of the social impact that Donald talked about. Because sustainability reporting is required in our annual reports going forward. But do you have the technology enablement to collect the data and report it? And that data must be auditable as well. You need to have assurance on your ESG reporting. So you need to have the data set. So technology, whether we are in Sub-Saharan Africa or outside, we need to make investment. But the quantum of investment will differ depending on the size of your organization and your ability to fund them. So Chime, I think I've addressed the 2 questions.
Yes, you have. Thank you so much, Sarah. We really appreciate your coming and your lecture and your presentation today. I'll hand over to Sabon now.
You're welcome.
Thank you so much for that powerful presentation, Mr. Ben. Thank you. I appreciate your presence here. For the time spent sharing knowledge. Thank you. Again, just to reiterate here that we're not taking attendance or confirming attendance by using those messages on the chatbot. So you are supposed to complete the Google form that we shared to confirm your attendance. And those streaming live on YouTube as well could probably hear me. I've dropped a good number of messages there with the link. So please let me know if you can't see them. So, okay. Okay, let's keep rolling out the registration. I think the next item on the agenda is to, or should I just hand over to Mr. Chairman? I think our friends, our colleagues in the UK wants to like have some announcements. Hi, Mr. Chairman.
Okay, thank you so much for this. And maybe before we get to the vote of thanks, can we have Mr. Tayo from UK? Do you want to say something? Are you ready? Mr. Tayo? Okay. Let's just move on. Please, this is just another.
Tayo wants to unmute, Mr. Chairman, sir. Akintayo wants to unmute. He's unable to unmute. Can we unmute him? Akintayo Ojo. I'll get that right. Maybe we can unmute all for now so that you can speak.
Okay. Sorry.
Thank you very much, Chairman. Is it possible to also show my face?
Please go ahead.
Okay, because I can't turn on my camera. And if possible, can you give my colleague Samuel Olayoye the opportunity to also unmute and show his face, please? Oh. Samuel Olayoye, that's my technical secretary.
Lekon, can you unshare?
So can we unmute and show our face, please? Myself, Akintayo Ojo, and Samuel Olayoye.
I think you can show your face.
Yeah, it says you cannot start your video because it's disabled by the host.
I've done it.
You've done that?
Yes, sir.
Okay, thank you very much. Yeah, they say that the talk is in the eyes. Ojulorowa. My dear chairman, I say a big congratulations to you and to your team for this wonderful event. It's been such an insightful event, and it's set the pace for our conference in March 2026. So I'm here with my colleague, Mr. Samuel Olayoye, to promote our 13th international conference coming up in London. First of all, let me appreciate all the three speakers for their thoughtful presentations. But let me also appreciate Donald Traynor, which we might be reaching out to and inviting to London. I think his presentations aligns with our conference topic. And so, Mr. Chairman, we will be using your contact to reach Traynor, and we hope he will oblige us when we call on him. So, Samuel, over to you.
Thank you very much, my chair, and thank you very much for having us. It's been a very good time with colleagues this morning so far. I mean, starting from 12 to date, really engaging conversation, really pleased with the delivery and the quality of what we've been hearing so far. Well done. Just to plug in quickly, as my chair has said, our international conference is happening in March. That's the 13th conference. 4th of March to 8th of March 2026. And as he has rightly mentioned, the theme of our conference is aligning people, profits, and planets. That's the triple P bottom line for every company. We talk about sustainability. We talk about, how things can operate into the future, looking at the planet, the people, and of course, it's a capitalist environment for the most part. We still need to make sure the bottom line is doing what it needs to do. So yes, we will be focusing on aligning those three, the triple Ps. And also equally interesting is the 35th anniversary of the ICAN UK district celebration. So we'll be celebrating our 35 years of being in existence as the foremost diasporal district of the Institute of Chartered Accountants of Nigeria. So it's going to be a time of celebration. We are celebrating a lot of our heroes, award nights, and the likes. But I want us to all be present. So you've seen the date. I'm using as my background the save the date icon. Please, it's a program not to miss. Register. More information will be provided. It's going to be in London. The logistics and all the information will be provided. I know a lot of people always attend from Nigeria and from different parts of the world. If you have issues with visa application, we need to write letters to the embassies, please reach out. By all means, you can find us on LinkedIn, on Instagram, you can find us everywhere, our websites. And we look forward to hosting as many people. And we wish you a successful conference as we continue to go on this journey. Thank you very much, everyone.
Thank you, Sam. Yeah. And we're also going to be in Abuja, so you can reach out to us in Abuja, for one-to-one. Thank you, Mr. Chairman. Thank you. God bless Republic of Ireland District. God bless you.
Yeah, thank you.
Sam.
Thank you so much. We're looking forward to your 35th anniversary, and hopefully, God willing, by the grace of God, we will all be there, healed and healthy, by the grace of God. Amen. Thank you, sir.
There's a question for UK. Someone is asking how much what's the cost of the conference and all that.
That will be given out later. We will issue that later. Yeah, not on this platform. Everybody will get the information. I can assure you, you will all get the information. Thank you very much.
Thank you. So, on that note, over to you, Lekon.
Yeah, I think I'll still stay with you, Mr. Chairman. So could you please give us the vote of thanks? I think it's been a very insightful session. Many thanks to our speakers. So, but I would allow you, please, give a proper vote of thanks.
Okay. Wow. Oh, this is awesome. We thank God for today, and we thank everyone that is there. We rebuke that.
You know,
So can we please unmute can we mute everybody except me for now, please? So this is my vote of thanks. Good afternoon once again, distinguished guests, esteemed speakers, dear colleagues and friends. Our first annual conference draws to a close. It is my great privilege and duty to deliver this vote of thanks. Today has been nothing short of inspiring, and that is due to the collective effort of many incredible individuals and teams. First and foremost, our profound gratitude goes to our distinguished keynote speaker, Dr. Aruna Yahaya, MNI, FCA, and that is our 61st president of our great institute, and our esteemed panelists, Dr. Muiwa, Donald, and Ben. Thank you for generously sharing your profound knowledge, cutting-edge insights, and visionary perspectives. You have truly helped us to dive into the future, and the knowledge you have imparted will undoubtedly shape not only our professional journeys, but also our thinking. Thank you for your excellent deliveries. To our special guests, and past presidents of our great institute, registrar, chairman of other districts, professional colleagues, and friends. Your presence honored us and added great weight to this historic occasion. Thank you for your unwavering support and for championing the growth of our district. A conference of this magnitude does not happen by chance. It is the result of meticulous planning and tireless effort. Therefore, I must extend my deepest appreciation to the various committees whose work was the backbone of this event. To the technical committee for crafting a rich, relevant, and stimulating agenda. To the public and media committee for spreading the word far and wide and ensuring our virtual space was filled with participants. To the membership committee for your relentless efforts in engaging our members and fostering our growing community. And to the entire conference planning committee for the countless hours spent on logistics, coordination, and problem solving. You are the unsung heroes of today's success. My sincere thanks also go to our moderators and session chairs for skillfully steering our discussions and ensuring our sessions were engaging and insightful. To all participants and members, I say a big thank you. Your active participation, thoughtful questions, and vibrant engagement in the chat are what truly brought this conference to life. This event was for you, and your presence made it a success. On a personal note, I must once again thank my wife, Tosin, and my family for their steadfast support and understanding throughout the planning process. Finally, and most importantly, we give all glory and adoration to the Almighty God for His grace, guidance, and for crowning our efforts with success. We are grateful. Though this conference is ending, our journey into the future of finance has just powerfully accelerated. Let us carry the lessons of today forward. Thank you for all memorable and a memorable and a groundbreaking event. And we look forward to seeing you again in UK, in Abuja, and also next year for our second conference, even bigger and better at next year. So I also want to use this opportunity to announce to us that ICAN Republic of Ireland District is here and thriving, building a community that is impactful while holding dearly the core values of our profession. We can be reached through our email, contact us at icanireland.org. I'll take that again. Contact us at icanireland.org or icandistrict.roi@gmail.com. We meet regularly on the last Saturday of the month at 12 noon. Thank you. God bless as you enjoy the rest of the afternoon. Thank you once again. God bless. I call on my colleague to give the closing prayer.
Praise the Lord.
Hallelujah.
The Eternal Rock of Ages, we thank you for the successful international conference and various impactful technical sessions held today. We thank God for all the participants on Zoom, over 1,000, and also on YouTube. We thank God for our facilitator for imparting our knowledge. We pray that all what they have taught us will remain with us and our career will move forward in this age of AI. We commit the rest of the weekend unto your hand, direct and order our steps, Lord, and have your way in our life. Let only your name alone be glorified. In Jesus' name we have prayed.
Amen.
Thank you, and God bless you all.
Yes.
Amen. Before we log out, please, the proof of attendance of this conference is the Google Doc that we have shared. The Google Doc that we have shared. Please ensure you fill it so that you don't miss out on the MCPE attached to this event. The Google Doc is the proof of attendance, not just somebody that will just come in 5 minutes, put their names and go out. Please, we accountants, we hold integrity in high esteem. So please, once again, I reiterate, the proof of attendance of this conference is the Google Doc. Fill it, send it to us, then we will collate and send to ICAN. Thank you so much. God bless and have a lovely and wonderful evening. So we'll leave the forum open for the next few minutes. If you want to catch up, please unmute yourself. Catch up with whoever you want to catch up with. Yes. So, and also
congratulations to Republic of Ireland for the
Thank you so
conference.
much. Thank you so much.
Congratulations.
Can we have
Thank you. Congratulations to Ireland ICAN. Appreciate all you did for us.
Going to have the appreciate. Can we have the slide?
Congratulations to Republic of Ireland.
The slide be shared with us.
Yes, the slide will be.
Congratulations to Chairman.
Congratulations and thank you to
We have the slide with our bills. Nigeria, can we be part of your district member?
Thank you.
No, Baba Dudu.
Thank you so much.
Congratulations.
No.
Thank you very much. Thank you.
Congratulations. Thank you.
So much appreciated. Republic of Ireland district and society. Thank you very much.
Wonderful event, impactful event. Congratulations.
A big congratulations to you, Chairman.
Congratulations.
Congratulations to everyone.
Congratulations, Chairman Anesco.
Chairman, congratulations. Congratulations.
Get the slide.
Please, where can I see the attendant to the link to register my presence?
Congratulations.
To print my presence.
Congratulations.
Reshare the link.
Well done. Thank you for sending the link.
Thank you so much.
Congratulations.
Congratulations. We need the physical one next year in Ireland.
Amen.
Yes.
Congratulations. Please, are we getting the slide?
Yes, we will send the slide. Please, we need
email.
Coming to Ireland next year.
No refreshment.
We are sending it.
No refreshment.
Congratulations. God bless Republic of Ireland. ICAN. God bless you.
For refreshment.
E-refreshment. E-refreshment. Thank you.
Don't worry, guys. E-refreshment for you.
Thank you.
Please just be consultant. We send it to you now.
Thank you.
So are we getting a certificate of attendance?
Congratulations. That's a good one.
Congratulations. We'll get the certificate of attendance as well.
Mr. Chairman.
Congratulations. Thank you,
Mr. Chairman, where can I register the attendance? Where can I do the attendance? On what? I'm not seeing the link.
Check on the chat.
Thanks
for the opportunity. Thank you.
Okay.
Congratulations. Congratulations.
Thank you, sir.
Congratulations, sir.
Congratulations, sir. Congratulations.
Congrats, yeah.
Have you received the burger? We are sending burger.
No, we've not.
Burger.
How
We
to
are sending
feed
you
the form? What? That's the link, sir. To feed
It's
that we
both burger
participated.
and pizza. Both
It's
burger and pizza.
on the
We have received the burger. We have received e-pizza and e-burger. It remains e-juice.
Congratulations, Republic of Ireland.
Congratulations, Mr. Chairman.
Congratulations, sir.
Very, very good.
Congratulations, Mr. Chairman.
Thank God. Chairman, when are we getting the slides? Chairman, when are we getting the slides?
As soon as we have the address of everyone, we forwarded to each person.
What are you going to feed? Congratulations.
Thank you, sir.
Thank you, ma'am. You're welcome.
Thank you, sir.
5 million.
Congratulations.
Yeah.
Congratulations.
Thank you.
Congratulations.
It's on the chat. You can just copy and paste it, please. Yes.
So boys can hear me. I'm saying hello to you.
Hi. Hi, I can hear you. Who is saying hello to me? I can hear you. Who is saying hello?
My name is Mr. Kenneth.
Hi, Mr. Kenneth. How are you, sir?
Password.
Yeah. Nice to meet you. Nice to meet you.
Nice to meet you again.
Yes, yes. Nice to meet you, Mr. Sylvester. Nice to meet you.
Thank you.
Nice to meet you. All right, Mr. Kenneth. Yeah.
I'm happy to meet you again.
Yeah, happy to meet you as well. Pastor people.
Thank you.
Google form. What about Google form? How am I going to find for Google form to fill? Look at the chat.
So it's on the group chat, please. I'll be sharing different messages.
Okay, you send it to group chat.
Yeah, thank you.
It's on the group chat. It has been sent separately.
The link is on the group chat. It's there.
Okay, is it not the one that we fill before the event?
No, this one is the new one for attendance.
Okay.
You can share it.
What is it? Give me a dominant road check.
They can share it.
Please, can you send it to our mail?
No.
It's already on this group. It's already on this page.
Okay.
If you have registered for this one here, it is on this page.
Okay.
Reshare it. I cannot see it.
It's there now. It's there.
To be closed in the next 5 minutes. So we need to rush already.
Is there? I can't find it. It's there. It's coming in, scrolling. You will see it. It's there. Okay.
I have sent it separately. It's there. It's on that page. Just click on it. It will take you to the page.
It's there. I just did my own now.
Please click on chat and scroll up. You will see it there.
Okay, click on the link and fill the form.
Another one is there.
Okay, thank you. I've seen it.
Okay.
Now fill your form.
Okay,
Please fill the form immediately. It's closing.
Please fill it. In the next 3 minutes, we will close the curtain. Please.
Please wait.
We are waiting for you
to come home, please.
What are you telling me?
Congratulations, Chairman.
Thank you, sir.
That was an awesome one. Very successful. UK, they were shocked with over 1,000 participants. And people on YouTube, they were shocked. How did they do it? It can only be God.
How many people on YouTube did you follow?
Now it has dropped to 41.
I'm submitting. I'm
Hello,
coming.
everybody. So just to comment here, thank you for a lovely presentation. I just wanted to, I put it in the chat as well, but let me just verbally say it as well. The Google Doc form, the Google Doc form is not accepting Hotmail, is not accepting Yahoo email. So people, ICAN registration might have been done with Yahoo mail or would have been done with Hotmail. So please take note of this and focus on the
Sorry, I have opened
numbers.
the Google form, but it's not responding. I've opened the Google form, it's not responding.
Yeah, so
My registered email with ICAN is not Gmail, so the Yahoo is not accepted.
It is not accepting Yahoo, yes, and some of us registered with
Thank
Yahoo.
you. I've seen it and submitted.
Okay.
Sorry.
Let me just
respond. What do we do about that?
Hold on, sir.
What do we do about that? If our
So we
email
can
is
use,
ICAN,
can we
it's
use
Yahoo.
our alternative Gmail addresses? As long as your membership number is there, membership number should supersede.
Please.
Okay,
Yes, you have alternative Gmail address. The Google Doc form that we have just sent towards the end of the program supersedes the registration. Supersedes the registration because not everyone that registered attended.
Yes.
And that is why we are monitoring
Congratulations.
it. Thank you, ma. Thank you, sir.
Yeah, but what
we are asking,
I'm happy to join this
we can
international
use our
event.
alternative Gmail address.
Is there no way?
Yes, go ahead and do
membership
it.
number should be the priority.
Yes, it will be accepted. Please, it will be accepted. Go ahead.
Okay. So that's the long for the
Mr. Chairman, sir.
Maybe the next 30 minutes.
The feed is not editable. The feed for
Mr. Chairman.
is not editable.
We cannot log in because we don't have Google email.
I tried passing, it wasn't going. But now
Mr. Chairman,
anyway.
I used my Yahoo and it worked.
It's okay. Is there no way this attendance
I have to do with their system.
we can be correlated with the registration form, the email there?
I hope the membership number will take priority because membership number will be where you will get everybody. Whether they use Hotmail, whether they use whatever email they've used 20 years ago.
Thank you, better. Thank you. That is better. Let the key be membership. Membership is the key.
Membership number, yes. Once your membership number is on that form, that should solve all the problems. Whether you use Rocket email, whether you use Transformer email, any email.
We need to log in, and we're not allowed to log in. Okay.
So you use an alternative Gmail address for that purpose. Alternative Gmail address. Alternative Gmail address, but make sure your membership number is accurate.
Report. I can't do this with this.
Thank you for giving us time. We appreciate you. We appreciate you. Thank you very much.
Report my email address.
Ireland.
I don't know.
Of Ireland, the Shadow Accountant of Nigeria.
I can't do anything with that.
We are closing the curtain. Thank you, Mass and Mass. Please, Executive Committee of ROI, ICAN District, can you please wait behind?
Okay.
Please.
People should drop now.
So,
what should I drop? And I can send.
you can
Too
fill
busy
it and
filling the
send it
form.
later.
Next time, landlord. Oh, yes, I can joke about
Okay, thank you, Stas. Thank you, Max. ICAN Executive ROI. Let's meet on another platform, please, so that we can close this. People are enjoying the burgers, they are enjoying the shawarma. They don't want to leave. So let's leave. Let's close this. Okay, over and out. Thank you, Sas, and thank you, Mas. God bless.
Thank you, sir.
Bye.
Thank you.
Thank you. Bye bye.
Bye, sir.
To miss next